me investing in my fund to go to 80% cash. I'm a long equity manager. I hope to God I do better on the downside than the markets, but I'm invested. So the only question is, how much will investors panic and liquidate? And we have seen redemptions the last few days. That, unfortunately, tragically, that's normal. Market drops, and as much as I'm saying, hey, it's a buying opportunity, people hit the panic button. And I suppose after today, we'll see inflows.
Andrew, just to sort of tie this all together, if someone was listening to this interview, they might come away saying, all right, go all in on Pinterest and Twitter. Was that your point here?
No, I don't think so. I think those stocks, and not specifically those stocks, but just those stocks in general, the carnage is so great, I'm not sure. I wouldn't recommend people to run out and sell them. I think they could bounce, but I don't think that's the big opportunity. I still think it's in the value names. But I just want to stress, I'm a core manager. I'm looking for the fast pitch. I still think it's in these cyclical stocks because we're going to get some more ugly inflation prints. And look, think about it this way, Lisa. Yesterday, financials the market got crunched and financials outperformed. Think about since the great financial crisis. Every time the market went down a lot, financials got destroyed. And they're not. They're actually leading in the downturn. That's very unusual. So I'm heartened to see that even in the downturn, some of the cyclical areas seemingly are leading.
Andrew,
that's very unusual.
You're one of the best. We've got to go. It's got to catch up, buddy, as always. Andrew Sliman there of Morgan Stanley Investment Management. Lisa, you mentioned a couple of tech names. Facebook. My producer, Jamie, every single afternoon keeping me up to speed on where Meta is trading. We've cut that thing in half since early September. In half.
It's just shocking if you take a look at some of the valuations. So when Andrew's talking about the tech giants that have held in pretty well, it is a select group. It is not all of them. And then you have these non-profitable tech companies that have been absolutely pummeled. The issue that I have right now is buy the dip means something different when the dips are so varied across the landscape of different sectors. I mean, it just, to me, I was looking at, for example, the energy stock sector. It's up 20% year to date for the S&P. Just giving you some sense of how much bifurcation there is.
Stat of the morning from Bank of America, Tom. The S&P's direct Russia sales exposure, 0.1%. 0.1%.
Yeah, this is really important, John, what you bring up here is the different percentages from Russia to us, from us to Russia. In every discussion we're having, I think, are really not understood by a lot of people. There's this huge belief we're tightly linked.
As JP Morgan points out, it's the indirect risk here. Slower growth, slower consumer spending due to higher energy prices. It's those kind of risks you need to try and gauge. Futures bounce up 0.6% on the S&P. Yields are higher by 3 basis points. Let's call it 197. From New York City this morning, good morning. Bramo's back. That's a good thing. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia's President Vladimir Putin says he's ready to pursue diplomatic solutions in the Ukraine crisis, but only if Russia's interests and security are guaranteed. Putin spoke after the US and its allies agreed on a first set of economic sanctions against Moscow for its actions in Ukraine. The Biden administration has delayed issuing permits for new oil and gas drilling on federal land. That could complicate efforts to keep gasoline prices under control. They're now poised to go over an average $4 a gallon. That's amid a conflict in Ukraine. A federal judge blocked the administration's method for assessing how its permit approvals affect climate change. The U.S. maternal mortality rate is already high compared to other wealthy countries. Now it has increased. According to the CDC, the latest figures show almost 24 deaths for every 100,000 live births. That's more than double the rate in the UK, Canada, and France. And black women fared much worse than white women. And in the UK, police investigating the so-called Partygate scandal have told Prime Minister Boris Johnson and others they are being questioned under caution. That means any answers may be used as evidence. This is according to a document obtained by ITV News. The probe focuses on a dozen events that allegedly broke lockdown rules. And Alibaba faces a wild ride over the next few days. Options pricing is pointing to huge swings in the stocks. Investors are bracing for a drop in earnings and further regulatory scrutiny. The Chinese e-commerce giant is expected to report a 60% drop in its quarterly profit on Thursday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
From New York City.
We're in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Now that we see the invasion is beginning, and Russia has made clear its wholesale rejection of diplomacy, it does not make sense to go forward with that meeting at this time. I consulted with our allies and partners, all agreed
Secretary Blinken there cancelling his meeting with Foreign Minister Sergei Lavrov from New York City this morning. Good morning. Futures bounced back on the S&P, up 0.5%. On the Nasdaq, up 0.8%. Yields are higher by 3 basis points on 10s to about 197. This curve is flatter. The distance between 2s and 10s, 36 basis points, Lisa. It gets narrower and narrower.
And yet people think that the Fed will take a signal from this and perhaps not move as aggressively. Will the high oil prices, will the inflation that we're seeing in salaries perhaps change this equation and force the Fed's hand?
Will the situation in Russia, Ukraine, will it change anything, Tom, for this Federal Reserve? The overwhelming conclusion, the consensus, no.
They're going to wait for data. No. March 4th is the jobs report. We move on to CPI March 10th-ish. 11-ish, and then we go on to 16, and they'll make a decision on the 16th.
Got unity at NATO, Tom. We've got unity with allies. That's the good news. The bad news for some people, and where the criticism has come from, that those sanctions that they delivered, Tom, aren't strong enough. They're lightweight.
Well, they're lightweight, and again, the key thing here is now the response from Mr. Putin. She gave us a wonderful brief a number of days ago. We're thrilled to bring back Tina Fordham, head of global political strategy at Avonhurst. Just thrilled she could be with us this morning. Tina, I read the Putin speech you did with all your professional ability, and I mentioned, I believe it was yesterday, about Lenin and the Bolsheviks. You go even further back to the 18th century and Catherine the Great piecing together what Peter the Great wrought. How does Putin go back to Catherine the Great?
I think we should interpret those remarks as his aspirations, but, you know, without giving away my trade secrets, if I've been any good at anticipating developments with respect to Russia, it's because I'm taking Putin at face value. He is telling us what he wants. I think he's also moved, though, from, I mean, I never thought he was a chess grandmaster, but from somebody tactical to somebody who's concerned about legacy. So that's what this is about.
What do the Soviet people want? Would you suggest the Soviet people, the Russian people, I misspeak there seriously, folks. Do you believe that the Russian people parsed between Lenin and Stalin, as he did in the speech, or that the Russian people care about empire?
So first of all, we don't really have very good sources of public opinion data about what Russian people think. They are concerned about what they hear on, you know, Russia Today and other domestic channels, which is that Russian speakers in those so-called breakaway republics are being abused. And that's where the risk of a false flag incident comes in. This notion that Putin is trying to project, saying that Ukraine is not a real country because of the borders drawn by Lenin, etc., has been masterfully deconstructed, by the way. If you haven't seen the speech yesterday at the United Nations from the Kenyan ambassador to the UN, he talks about how if we're going to revise the borders and reconsider the sovereignty of every country that came out of empire, where do we start? And that Kenya and other African nations, which of course came out of colonial borders, also largely arbitrarily drawn, don't want to go there. That's the risk of what Putin is talking about by denying the sovereignty, the right to exist of Ukraine. And that's why this isn't about just these breakaway republics, Donetsk and Luhansk.
Oh, if the global order doesn't accept sovereignty and borders, then we have no order, Tina. I think most people would agree on that. What's interesting for me right now is just how effective these sanctions might be. Tina, they seem to be sanctioning again the high net worth individuals, the oligarchs in and around President Putin. I wonder how effective that's going to be. I watched that National Security Council meeting that was broadcast on Russian TV. They didn't seem like the kind of individuals that were about to turn around and tell President Putin he should change course. Do you think that this will be effective to go after the people with money, the people close to President Putin?
Of course it's not enough. But let's also remember, in fairness to the sanctions drafters who have a very tough job, that they're also attempting to sequence the sanctions, right? So to start with one wave, the EU sanctions have gone further, by the way, Jonathan. The EU has sanctioned all of the parliamentarians, hundreds of them in the Duma, who supported this move. But if there is a full-blown invasion, as U.S. intelligence seems to be warning, I also think Putin will go further. I don't buy what I'm seeing in some investment research that we're going to see a de-escalation. I see the opposite. We'll see another round of sanctions. So you don't want to, you want to keep some powder dry in the event of a worse event. But what I think markets are not giving enough attention to, and I listened with great interest to the previous guest and the bullishness, is the risk of a catastrophic incident. We are in what Clausewitz called the fog of war, and Russia has nuclear weapons.
Well, Tina, then what are you advising clients to do? I mean, how do you factor in that risk, that tail risk, that perhaps in your view is becoming more real?
Well, I think we moved from a tail risk a long time ago. And one of the things that I've been advising my clients for many years now is not to think in terms of a base case and a tail risk, but rather plausible scenarios. So we need to stress test portfolios against that. I don't disagree with the immediate conclusion of market participants that if anything, a geopolitical risk incident may, keep rates lower for longer, but not yet. I think the more worrying point really is about supply disruptions and, the international system. How does it impact investor portfolios? Russia has given us a very clear signal that it is not coming back into the fold, that it doesn't really care about sanctions, and that it is not a reliable partner. And in my 25 years of watching Russia, this is a real change in trend. We're not going back.
Tina, wonderful to catch up with you. Some really strong words there. Tina Fordham of Avonhurst, the head of global political research and strategy. Tom, that line there, we're in the fog of war, accidents can happen.
Yeah. It really harkens back to the fact and the fiction of not only our youth, but what we remember from the 30s as well. It's a phrase that has a huge, huge resonance. John, I was a victim of my childhood there, and I misspoke. I think it is so serious. I want to apologize for conflating Soviet with the word Russian. That shows my vintage, and I'm really quite sorry for misspeaking.
And that's okay, Tom. We're allowed to correct things. If things are wrong, correct them.
As Tina mentioned, growing up in this, we are at a point of shock. There's a certain thing about 89, 90, 91, 92. I've actually spent some time with Gorbachev, not with Yeltsin. And, I would go back really to the Yeltsin pivot, John, to the modern Russia that brought us Mr. Putin.
Tom King, Lisa Bramis and Jonathan Ferro. Futures this morning with a bounce up 0.5% on the S&P, on the Nasdaq up 0.8%. Yields are higher too by 2 or 3 basis points to 196. Let's round it up to 197 on 10s. This curve though is flatter. Your 2s 10s curve now 36 handle, 36, flatter, flatter, flatter. The Federal Reserve still hasn't hiked interest rates. That's still to come. Going to be very interesting to see how far they're willing to push this. Will they be willing to start a rate hiking cycle if this curve starts to go even flatter, maybe even invert?
Almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame. Sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Investors are really dealing with what is a trifecta of concerns and challenges.
Seriously, every single headline is creating an aggressive move in the futures.
Volatility reflects current market activity, market participation.
This is obviously a short-term flight to safety, but I don't think that alters actually the long-term growth prospects.
I think now you may have some clarity coming after the actions of the Russian government.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Stocks up, yields up. We've got a bounce here from New York City this morning. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures up by 0.4. The bounce fades a bit, TK. The Nasdaq up by 0.7. Correction territory at the close yesterday.
We've got the huge advantage of the terminal equities, bonds, currencies, particularly currencies. Look at renminbi strengthening out. That's a separate story on strong yuan. But, John, the number that I look at on the screen, and you can take it to 3 digits, 36.172. We have legitimate curve flattening this morning.
The curve is flatter, Tom, south of 40 basis points as we go to that meeting next month. Tom, does that shape the views of anyone on the FOMC?
I think they're going to wait. We don't know what that meeting's going to be like right now. Massive uncertainty. I don't mean that in a negative way, but massive uncertainty. And they've got the jobs report and the inflation report. And frankly, John, the ISMs early in the month, I can't believe I'm saying that. They have merit too.
I got you on board, Tom. Took me about 10 years, but I got you on board to actually look at the ISM. That's good news. Thank you. Lisa, March 10th for the next CPI print.
The CPI print, how important is it going to be after all of the corporate earnings? And I say that because people keep talking about the dynamism in corporate America. They keep talking about people who are still going out and spending, even if they complain about the high prices. At what point does the Fed take a look at that granular corporate data and say, well, people might be feeling kind of rotten, but they're still going out and buying. And because of that, it's hard to see how this inflationary bent can really fade that quickly in the near term.
So Kathy Jones of Charles Schwab brought this up, Lisa. I think you'll appreciate it. We've looked at the crude price, commodities rallying over the last 12 months as reflecting really strong demand. At what point do we pivot and look at them through a different lens and start to say that could eat away at demand? That could erode demand.
Well, this has been the big question. At what point do higher prices actually lower prices because it crimps consumer demand? We have not seen it yet. And that, I think, is the big takeaway from retail sales, the big takeaway from a lot of the retailer results that have shown record gains in terms of how much people are spending on clothes.
The fog of war, Tom, some really strong words from Tina Fordham in the last hour of Avonhurst. Accidents can happen, she kept saying. She was very, very very, very focused on what would happen next.
And David Weston watching this morning. Thank you, David. This is way too early for Weston. I mean, he slides
Weston's
in.
awake?
He slides in like at 11:40 a.m. But, he goes back. He says, look, this is what Tina's talking about, which is Clausewitz, the Prussian theorist from the early 19th century. And he talks about a fog of greater or lesser uncertainty and the need to be especially acute now. That's the skill set that's most difficult.
The Prime Minister in the UK, Boris Johnson, saying the UK is to provide further military aid to Ukraine. PMQ is taking place right now. We'll bring you the headlines from that as they pour in. And good morning to David Weston. Looking forward to Balance of Power a little bit later. He's up very early, Tom. Futures up 20 on the S&P, up 0.4%. We have a bounce here on the Nasdaq too, up 0.8%. Yields higher by 2 or 3 basis points to 196.51. TK picking up on what's happening between the distance between 2s and 10s. It's narrower. Lisa, that curve is flatter.
How much does this lead to a shift in what we see from the Federal Reserve? How much, you ask the question, are Fed officials paying attention to this, or do they shrug it off, as Bill Dudley said, which is a distortion of markets that have been heavily influenced by central banks? Today, in about 15 minutes, we hear from the Ukrainian President Vladimir Zelensky. How much does he come out and slam the tepid response that we have seen so far, at least tepid based on some of the responses that we have heard from allies? Also, we're hearing from the Lithuanian and Polish presidents. How much do we continue to see that unity versus some kind of crumbling of that unity as actions have to take more of the forefront rather than just harsh words? At 11 a.m., we hear from NATO Secretary General Jens Stoltenberg and Dutch Prime Minister Mark Rutte. They're going to be talking about stronger together. NATO's future strategic concept again. The unity, how much is there? How much meat is there behind even the German assertion that they are going to not move forward on Nord Stream 2? Does it matter? Is there any hard talk backing up some of the softer measures that have been taken so far? And at 1 p.m., the Treasury Department is selling $53 billion of 5-year notes with that 5-year yield near the highest levels going back to 2019. And we end where we began, that flattening yield curve. Is this a signal? Is this noise? And John, you're seeing it across the entire spectrum of yield curves. Even the 2-5s spread, basically the gap between 5-year and 2-year Treasury yields, has narrowed to the least going back to the end of 2020. How much does this indicate that the Fed is going to kind of make an error and hike into weakness, especially with higher oil prices?
Lisa, thank you. One to watch. Stuart Kaiser with us now, the head of equity derivatives research at UBS. And Stu, we started with that 10% correction. Let's go there. Not all 10% corrections are created equally. The difference between one you want to buy and one you want to run away from. Stuart, run us through it from your perspective.
Hey, good morning, Jonathan. I think in this case, we're being very, very patient, very, very cautious about the markets. We expected the first half of the year to be highly volatile with a lot of risks. If you look at the calendar for the next 3 to 4 weeks, it's really hard to find a soft spot in there where you'd be comfortable re-engaging in the market. So from our perspective, it's not time really to buy this dip, just because I think you'll get more bites at the apple at levels similar to this over the next kind of month or two.
Big focus on tech, on the cyclical part of the market. We caught up with Mr. Slibman of Morgan Stanley in the last hour, Stu. He was talking up the cyclicals, saying there's nothing to worry about here. Why would the banks be up if we're all worried about a slowdown in growth and a Fed taking it too far? What say you, Stu?
I think this is the big debate is sort of what is going to drive the market both higher and lower. I think in the last couple of weeks, we've seen both sides of that coin. When it was inflation risk and rates that were driving the markets, you had a different mix of sector leadership. But this, Russia-Ukraine is sort of a more traditional risk off, where I think higher beta stuff in general is getting sold. So I think if you get back into the inflation sort of Fed discussion, then you can be long banks and you can be long some selective cyclical parts of the market. If you're worried about this existential stuff coming out of Europe, I don't think you really want to own anything with beta. So really, I think that's what's whipped the market a little bit around, is you have two distinct risk drivers, and the market has priced them in a very different way. So again, for us, we're remaining fairly cautious, zero edge on what's going to happen in the Ukraine, and just sort of, I think it's a read and react market, and that's another reason why I think people have been very slow to re-engage with risk.
Part of this, Stuart, and good morning, on the technical aspect, and also folding over to what we measure in what's called the cross moments of the derivative space, is the idea of catharsis. How do you look for catharsis if, as you publish, you're looking at this as bending markets? Where's the catharsis?
Tom, I don't think we've seen it yet, to be completely honest with you.
I don't see it.
I don't feel like we've had that day where it just felt like everybody was selling everything, and throwing the kitchen sink at it.
Do we need that to reverse and go higher?
Personally, yes, I do think we need that. And you're also in the midst of a Fed regime shift. And typically when you shift regimes, things, behave in a wonky fashion. So in our view, you're still in a bend, haven't broken mode. And this bumpy ride is going to continue, based on what we saw in January and based on the calendar we have ahead of us. So no, we don't think you've had that cathartic moment yet.
If you don't buy this dip, Stuart, what are you holding?
Holding on to the arms of the chair for the most part. But look, I think what we've seen investors doing is holding cash. A lot of risk has been taken down in the market. I think hedging is pretty full, so people have reduced risk either through owning less, which is the easiest way to hedge, right? Or kind of owning put options on various assets, whether that's high yield credit, whether that's U.S. equities. So again, I think, excuse me, I think prior to this Ukraine issue, what people were holding was energy and banks, on the view that energy prices were going higher and rates were moving higher. I think the Ukraine situation just throws another wrench in the spanner because, as I mentioned, it changes market leadership. So I think from my perspective, you're being fairly cautious. You're running low risk. You're hoping that this Ukraine thing passes and you can get back to the trade that I think really started the year, which was yields higher, banks higher, energy higher.
Do you think, ironically, Stuart, that the ESG effort has actually helped the energy players on the S&P?
I mean, it seems to have, in the sense that the supply response on the energy side has been slower, I think, than you would have expected it to be a couple years ago. And, if we're talking about Europe in particular, I think the number one risk a lot of investors see in Europe is the energy situation, where I don't want to say they're facing energy shortages, but the price elasticity demand in Europe is going to be much higher right now because you've cut off a bit of supply from Russia, and they've also walked away from things like nuclear that would have been able to kind of paper over those cracks. So I think it has helped. I think it's made oil prices much more sensitive to these types of events, which has clearly helped the performance of energy stocks.
Stuart Kaiser, as always, of UBS. Stu, great to have you in the studio as well. Thanks for being with us here in New York City. Lisa, you've seen the move on the energy names on the S&P 500 up by more than 20%. You've also witnessed the reluctance of the C-suite of the places like Pioneer and elsewhere saying, no, thank you. We do not want to drill with crude at 100, 150, or even 200.
And this, honestly, is one of the big swing issues, which is the shale producers. How much discipline is there? How disciplined can they remain if you do see $150 a barrel of oil or even beyond, right? Or do they actually start to drill, baby, drill again?
So what does the administration do, Tom? That's the next move that I'm interested in. To hear President Biden speak yesterday and talk about the costs associated with defending freedom abroad, how will that play at home? What are the policy levers he can pull? Can he secure a deal with Iran? Can they have that gas tax holiday that was reported in the Washington Post in the last week as well? Is that where the effort goes from here?
I don't think Iran's on the radar of the American people, and I would take it again across the Atlantic, John, 8 time zones to Moscow. Maybe it's 9 time zones. I can't remember. Anne-Marie Horton knows that statistic. And the answer is they're going to wait to see the reaction of Mr. Putin. And, I don't need to get into the inflammatory Twitter stuff we see about what's happened in the last 5 or 6 hours. But, John, I would just note, dollar ruble is a good thermostat, and we've had, since the length of the show began here, that's a typo on my part, folks. That's RUB, not RUBL. On radio, we've moved weaker ruble 78.65 to 79.76. John, I'm sorry, over 80 through 81 is stunning if we get there.
Much better just to show the live currency pairs it trades, Dom. Dollar ruble pushing 80 at 79.79. Tom Keene, Lisa Bramis and Jonathan Ferro. Futures up 0.5% on the S&P, on the Nasdaq up 0.8%. Yields high by 3 basis points. 196.68 and crude backing away. 91.37. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. Ukraine is moving towards declaring a nationwide state of emergency. That would allow Ukrainian officials to impose restrictions on movement and media following Russia's recognition of 2 self-proclaimed republics in Ukraine. Meanwhile, President Biden's first round of sanctions on Russia was seen as underwhelming. Members of Congress from both parties want him to do more. And the fortunes of Russia's super rich have fallen $32 billion this year, and sanctions from the conflict in Ukraine are likely to destroy even more wealth. Gennady Timchenko heads the list of Russian billionaires who've seen their fortunes drop. According to the Bloomberg Billionaires list, almost a third of his wealth has disappeared this year. He now has a fortune of about $16 billion. In Hong Kong, the government is trying to offset the toll the escalating virus outbreak has taken on the economy. Eligible residents will get almost $1,300 in spending vouchers. Authorities have also earmarked more than $2.5 billion for other antivirus needs. Hong Kong's economic growth is expected to slow to as little as 2% this year after growing 6.4% in 2021. And Lowe's is signaling that Americans' increased spending on home improvement projects still has room to grow. The chain posted better than expected quarterly sales and raised its outlook for the full year. Lowe's also saw operating margin improvement in the fourth quarter. And Barclays has posted its highest annual profit on record. The British bank's dealmakers had a busy end to the year that helped offset a slump in trading activity. In the fourth quarter, income from Barclays Capital Markets and merger advisory work rose 27%. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Tuesday night, March 1st.
We are ready to respond decisively.
Bloomberg brings you live coverage of the State of the Union address.
America is back to work.
Hosted by Joe Matthew.
Inflation is kind of the #1 talking point so far.
Reaction, analysis, and what it means for Wall Street.
He did leave this door open.
Those are the words Democrats wanted to hear.
Biden may get a little bit of a lift on this.
The State of the Union address, followed by the Republican response. Coverage begins Tuesday night at 8:30 Eastern.
Every indication is that Russia continues to plan for a full-scale attack on Ukraine. We see the ongoing military buildup. They promised to step back, but they had continued to step up.
Jens Stoltenberg there, the NATO Secretary General, with futures this morning bouncing back from yesterday's losses in the equity market. We're higher by 0.6% on the S&P. On the Nasdaq 100, up 1 full percentage point at the close yesterday from the previous high, January 3rd. The S&P 500 down by more than 10%. Yields are higher, Tom, up 3 basis points on 10s to 196.86. You've been on top of this throughout the last few weeks, to be fair, TK. The relentless flattening of the yield curve. That distance between 2s and 10s gets shorter. That curve is in the 30s.
Not the time to do it here, John, but there is a massive distinction for the pros, folks, between a flat yield curve and an inverted yield curve. We'll do the math on that when we get a window here on fixed income dynamics. Joining us now, and this has been hugely popular. Thank you for the comments in Washington, Anne-Marie Harden, in Brussels, Maria Tadeo. Maria, we all await a response from Mr. Putin. How does he form that response? Is it an ad hoc aloneness of Vladimir Putin, or does he have a team deciding how to respond?
Well, Tom, we've seen it very clearly over the past 48 hours. He doesn't listen to anyone. This is a decision that is made by Vladimir Putin, and everything around him is theater, is optics. When he calls his generals to get their opinion, in reality, we know that Vladimir Putin has already made that decision. By the way, today we haven't seen anything or heard from him because it's a public holiday in Russia. We could see it tomorrow, but there's 2 focus points where really the attention is based, particularly from NATO. One is, what is he going to do in Belarus? Remember, over the past 48 hours, he has essentially taken over 2 regions in eastern Ukraine and has deployed troops permanently in Belarus, which is the fastest way to the Ukrainian capital. So those are the 2 points where the attention is focused. What happens in Belarus and what happens particularly in the Donbass region?
Well, in the Donbass region, and summarize here, Maria, from Brussels, all the reporting you have of the distinction of where the separatists and Russians are now. And if they move west into the rest of Donbass, how will that be treated by Kiev and the West?
And that is the point, Tom. If they stay where they are, the reality is, and this is very crude to say it and put it this way, but we know that the Ukrainian government has completely lost control for 8 years of the 2 breakaway republics that Russia is now saying they recognize. Having said that, if they move away from that, then you talk about East Ukraine. And I was told by a Ukrainian official, at that point, that means war. So the distinction in those 2 lines is key, and that is really the battleground.
In all of this discussion of war, the fog of war, as Tina Fordham was saying, Anne-Marie, we are looking at a repositioning or deployment of 6,000 U.S. troops to Germany, Poland, and Romania near the border here. That is the scope in contrast with 190,000 troops that Russia reportedly has built up on the border. Is there any discussion about further troop deployment? What is the pushback like on that?
The president mentioned this yesterday, further troop deployment into the Baltics, the likes of Estonia, Lithuania, Latvia. You also see the Defense Secretary Lloyd Austin talking about some movement of troops instead of Germany and Greece. Let's put some artillery and potentially troops as well in the likes of Poland. Poland is really critical right now for the administration because we did know that they were so concerned about a further invasion of and Russian aggression onto Ukraine. Even though they have moved the embassy to Lviv, they then took all their staff and moved it into Poland overnight. So what you are seeing the U.S. doing alongside their allies is just bolstering that eastern flank. And we should note, this is exactly what President Putin does not want.
Well, President Putin, however, has seemed to be clear. He's okay with the fog of war. He is okay being the aggressor. In fact, what he desires might not make economic sense for his nation, but it makes sense to get the predominance of the Soviet Union back to hearken to an older time. I am wondering whether the U.S. has the appetite for war, whether the allies have the appetite for war, or whether the measures that we're seeing now shows that they do not.
So two things. The president has made it clear, and he said so again yesterday, they will not be sending American troops into Ukraine. But Lisa, I think you hit on a point that I think a lot of people studying Putin and looking at the situation just don't quite grasp. If this is going to be harsh economic pain, which we saw the first tranche, but potentially there are going to be other tranches of sanctions, this will hurt everyday Russians. It will hurt the elites around President Vladimir Putin. But he's had sanctions. 2014 annexation of Crimea, there were sanctions. When he poisoned Sergei, or called for the poisoning of Sergei and Yulia Skripal in Salisbury, there were sanctions. This is an individual who has said the greatest catastrophe was the breakup of the Soviet Union. And his speeches over the course of the years, his letter in July, the verbalization of that letter basically over the weekend, really clarifies that. And this is where his mind is when it comes to Ukraine, especially the eastern Ukraine.
Anne-Marie, you've made the point. I think it's a really important one. So many people come on programs like this. They try and work out what the Russian president is thinking. Your point is watch what he's been saying, watch his actions, and also observe the importance of history as well. Today, Anne-Marie, as you know, it's the Defender of the Fatherland Day, the importance of today, the importance of February 21st. How important are these dates for him?
Vladimir Putin is someone who is really an assiduous student of history, and he loves dates. When I was in Moscow for the quote-unquote last election, they moved the date so that it matched up with what they call the reunification of Crimea. February 22nd, the day that we had a lot of this going on, was actually the day that Viktor Yanukovych, a Russian-backed leader, was fleeing Ukraine. This was a moment in which Russia lost that sphere of influence in Ukraine, and you had former premier coming out and saying this is a new Ukraine, a European Ukraine. Then you have today Defender of the Fatherland, and we've already heard from Putin in a statement talking about the crisis right now on this day, which is Veterans Day in Russia, saying that he wants a path for diplomacy, but not when it comes to Russian red lines. Those Russian red lines must be in the diplomatic talks. Now, already the United States says that's non-negotiable because that is a veto on Ukraine and Georgia entering NATO and also pulling back NATO troops to the 1997 line.
Hey, mate, I've got to say, really looking forward to the interview a little bit later. Anne-Marie Hordern there, alongside Maria Tadeo. Anne-Marie catching up with the Ukrainian Foreign Minister. Tom, that interview taking place around 3:30 Eastern Time.
Usually fluid, and again, let's go 8 hours out on that, or 7 hours out, I should say, John, and you're deep into the evening. And it gets us to where are we tomorrow morning, not U.S. morning, but European morning. And you wonder, after a one-day pause, is it a launch of further developments here? There
was some language used by the British Prime Minister and the President of the United States. They both used this same phrase, tranche one, the first tranche, Tom, of sanctions. Just implied there's more runway here, there's more to come.
Yeah, and they've got a new confidence in the coordination, particularly with Germany and the United States.
Tom Keene, Lisa Bravis and Jonathan Ferro. Futures up 0.7% on the S&P. Yields are higher by 3 basis points to 197. From New York, this is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Direct Russia sales exposure on the S&P 500, 0.1%. That's stat from Bank of America. We've got to think about what JP Morgan's thinking about, the indirect spillover here. A slower consumer off the back of higher energy prices. A recession perhaps in Europe if things escalate even further. Higher gas prices there. They're the issues we need to grapple with. For this market, we bounce up 0.7% on the S&P. On the Nasdaq, up more than 1% at the close yesterday. You know well, we're down more than 10% at the close from the previous high on January 3rd. Is this bounce one you want to get behind? We can talk about that through the show this morning. In the bond market, 2s, 10s and 30s. The focus on the 2s. I talked about the towel being at the front end of the yield curve yesterday. For a lot of people in this market, this was a Federal Reserve that was still going to keep going to hike interest rates next month. We started to build up the front end again, back through 160 on 2s. And that spread between 2s and 10s, Lisa, we're in the 30s again. Narrower, narrower, narrower. That curve is flatter, flatter, flatter. When was the last time we were this flat?
Back in the beginning of 2020, before the pandemic, or as it began to gain steam, we heard from Mohamed El-Erian this morning talking about how the Fed will be paying attention to this. So how much will this actually deter them from moving as fast as some people expect?
They haven't even hiked once yet. Not once.
They're still buying bonds.
We're already talking about that. I thought they finished soon.
They do. They finish March 9th, I think.
Just unbelievable to get your head around this. 10s at the moment. Where are we? 10-year yield at 197.20. That's the US bond market. I want to go down south to the southern hemisphere and talk about New Zealand. The New Zealand Central Bank made a move overnight, but it made a move about the destination on rates in the forecast. And that's going to be increasingly important for so many of you. Not about the start of the journey, not necessarily about the pace, but the endpoint, the destination. And Tom, the destination for this central bank has changed. They go from 250 to 325 for year-end next year. And as we start to think about where a hawkish surprise might come from, that's where it might come from. Do they change the ultimate destination at the Federal Reserve for how far they're willing to take this?
Well, there's a selected group of banks here that try to get out front where they say we are not emerging markets, we are fully developed economies. And New Zealand is one of those. And as you mentioned earlier, John, there's a heritage of New Zealand getting out front.
The RBNZ, one to watch. That's the cross-asset price action. Let's get you some single names. Do you like that, Tom? Do you like that?
Romain says Z because he's
your morning movers with Romain. Good morning, Romain.
All right, we'll take a look from A to Z here. And we talk about, of course, the big drawdown that we saw yesterday with the S&P 500 closing 10% down from that all-time high. And a lot of that, of course, has to do with the big drawdown that we've seen in tech stocks here. And of course, when you go back to the all-time highs that we had in late November and in early January here, we're pretty significantly below that. The NASDAQ 100 down 17% from that all-time all-time high. Apple down about 10% from its all-time high. Tesla down 33%. Microsoft down 16%, though. Interesting note out by the folks over at Goldman Sachs that looked at a lot of the 13F filings and showed that there was a significant tilt to some of the value names and a shunning of some of these growthier tech stock names. There's a competing note out by Katie Huberty over at Morgan Stanley that said that same data could actually be a contrarian signal to come back in and buy. All of the major tech stocks right now are higher here in the pre-market. Apple up 1%, Tesla up almost 2%, Microsoft up 1% as well. It'd be interesting to see if these drawdowns have finally reached some semblance of a bottom and whether that's going to be enough here to provide a little bit of lift to this market amidst all the geopolitical issues swirling around. We are still getting earnings out there. We did get Lowe's earnings a little bit earlier this morning. A beat and a raise quarter for the company made even more significant by the fact that its competitor Home Depot yesterday missed pretty big here. Those shares up about 2.5% on Lowe's. We're getting TJX earnings crossing the wire just now. The shares down slightly by 2.8% right now. They missed here on some of the revenue numbers, so they did beat on EPS. However, they did provide a guidance that did come up just a little bit light. We should point out for the quarter they had about $14 billion in sales. That was a little less than what the street was looking for. Comp sales growth, the forecast for the quarter, going to be about 1 to 3%, also a little bit less than what the street was looking for. And after the bell tonight, we're going to get some more earnings out of some of the retailers and e-commerce companies, including eBay. Those shares are slightly higher here in the pre-market.
Romaine, thank you so much. And again, the close this afternoon to sharpen up here the back end of this earnings season. Right now in bonds and with an incredibly smart noted credit size is Winnie Caesar, Global Head of Strategy. And Winnie, I love what you say about capturing little bits of movement here where it's not about yield change, but it's trying to find in fixed income where price will go up. Where is that? What part of fixed income do I find little bits of price moving up?
Good morning, everyone. Thanks for having me. That's a great point. And what we've noticed is the belly of the curve in investment grade, you're actually now trading at a discount to par, which very rarely happens, right? I mean, usually in the investment grade market, investors are going to expect to be made whole at par. And you don't see these discounts outside of very stressed period of times all that often. And so we are recommending that investors take a look at the belly of the curve. And then also in high yield, we've now started to see bond prices trade at a discount to par. And that market is a much different market than it was in the mid-2000s. And really the leverage to energy in that market is a fairly positive thing with all of the geopolitical risks and kind of Russia-Ukraine headlines.
We've got some major jargon going on here, folks. CFA level 1, the belly of the curve is identifiable. But Winnie, seriously here, how do you define the belly of the curve?
Yes, I did have the jargon speak. So we like the 5 to 10 year segment of the curve. So not really long duration, you know, that 30-year segment of the curve, but just extending a little bit so you don't have a really kind of inflated front end portfolio into the point of curve where you actually see a lot of new issue, which also helps when you're looking for liquidity and adding to portfolios and sizes.
Winnie, taking a look at the broader credit complex, a lot of people say we are not heading toward another credit crisis by any means because companies have done such a good job of kicking the can down the road, of extending out their maturities, of getting their financing as cheap as possible. But are you starting to see that window for cheap financing really close up?
What we're beginning to see is the opportunistic window shutting. So for those issuers who are really trying to aggressively address capital structures and refinance, I think that window has closed. We've already hit the all-time low point in yields in both investment grade and high yield. And now it's about kind of picking your spots where those types of opportunities still make sense. The energy sector is one such sector where we think that refinancing is probably going to continue because you've had a bit of a later recovery in that sector for issuers, and borrowing costs are still pretty attractive, all things considered. Now, overall, we don't think that the move in yields has become a threat to either investment grade or high yield quite yet. Companies can still borrow at very low levels overall, and this kind of slowdown in new issue supply that's just a natural effect of volatility in the market is actually very constructive technically for the market.
Winnie, there are two issues here, and this is something a lot of people have been trying to wrap their heads around. On one hand, you could potentially get a rates-driven sell-off in the credit market. At what point does that lead to some sort of corporate credit response? In other words, it's not going to affect these corporations because their financing is so cheap and they don't need more money. So at what point are we kind of immunized? Could you see a pretty big sell-off in the valuations of some of these credits, but even see companies with very solid balance sheets?
So what you ultimately need to have is this kind of spiral of rates volatility driving spread volatility, which drives really negative total return losses in portfolios. And then when investors go and look at their, Q1 22 statements and say, oh my gosh, why are my investment grade bonds down 7% this quarter? And then they start selling into that down market, and you get this kind of spiral of spreads widening more, and liquidity really gets cut off from the market. Now, given the amount of cash still on the sidelines, we feel fairly confident that there will be a clearing level where institutions step back in and say, oh, actually, 10-year credit looks pretty attractive at 3.5%, but we haven't quite reached that point yet. We were thinking 3 to 3.5% in investment grade as the level where institutional investors would kind of step back in. But given the Russia-Ukraine headlines, I think that that's keeping people kind of sitting on their cash a little bit longer than we would have expected.
Winnie, thank you. As always, good to hear from you. Winnie Caesar there of Credit Size. Tom, I know you're looking at one currency pair right now, dollar ruble. We saw 80 on Monday. We saw 80 on Tuesday. We're about to see 80 again. Yeah. It's 79.98.
It's a leg up to 80. A print of 81, a weaker ruble, John, is a huge, huge deal. We're not there yet. And I'm not even going to speculate why we're seeing 77 through to 78. And, of course, here at any moment, 79.99 on ruble. I don't want to speculate on the why of that, John, but I would just say to go through weaker and to print 81.XX would be a huge signal.
Stronger ruble yesterday, Lisa, weaker ruble this morning. We've seen life above 80 before. Didn't last very long.
No, people are, though, saying this time might be different and that their economy is that much more isolated, and it seems like Vladimir Putin is not necessarily, no pun intended, trumped by the economic feedback loop on his economy. He wants something different, and that's going to lead to record weakness in the ruble. That's what I keep reading about anyway.
What, that we get more weakness?
Yeah, it's, everyone's saying...
Even with crude prices up here in the 90s?
Which is sort of interesting. And actually, some of the moves that I'm seeing in currencies that really don't make sense to me. I mean, for example, the Chinese currency, how does that make sense?
Well,
the fact that it's the strongest going back
I'm with you.
That 2016?
That didn't make sense to me all of last year.
I mean, here we go. It's like they're weakening, they're easing their currency, they're easing their monetary policy, going in the exact opposite direction, and they're seeing the most currency strength going back to 2016 versus the dollar.
It's a really interesting time. On dollar ruble right now, we call it 80 yet, Tom. 79.99. Do you want to leave that there and wait? 80 very briefly.
I think it's all there. And we haven't even mentioned this morning, John. The strength in renminbi is stunning. Onshore yuan. I mean, it gave me pause this morning to see it. I'm looking for it on the screen. 6.3167, John. That's a wow statistic of strong yuan.
It's nice that you and Bramo are on the same page this morning, Tom.
Well, it's notable.
Yeah. It's notable. I'm with you. Let's set the stage for you this morning. A good morning to you all at home, wondering what on earth we're doing. A lot of these are inside jokes, which don't work on TV or radio. I don't know why we do them. Futures up 0.8% on the S&P, on the Nasdaq up 1.2%. Yields up 4 basis points to 197.73. Tom looking at dollar ruble, very close to 80. Crude 91.50. We're down 0.5%. In the FX market for euro dollar, 113.44. We've talked about what it means for the Fed. What does all this mean for the ECB and their next move? From New York City, for our audience worldwide, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia's President Vladimir Putin says he's ready to pursue diplomatic solutions in the Ukraine crisis, but only if Russia's interests and security are guaranteed. Putin spoke after the US and its allies agreed on a first set of economic sanctions against Moscow for its actions in Ukraine. Apollo Funds has agreed to buy auto parts maker Tenneco. The all-cash deal has an enterprise valuation of about $7.1 billion, including debt. That represents a 100% premium to Tenneco's closing price yesterday. Rio Tinto Group has established itself as one of the big winners in the global economic rebound. The world's second largest miner delivered its highest profits ever and announced another massive dividend, $7.7 billion.
We have started the year well, but I'm not in the game of predicting commodity prices. They are very volatile. So, but short term, there's a good demand from China, and longer term for a company like Rio Tinto, the metals and minerals that we are producing are really being helped by the energy transition.
Rio Tinto's most important commodity, iron ore, hit record prices last year, and so did copper. In Canada, banks froze about $6.1 million in just over 200 accounts under emergency powers meant to end those truckers' protests. That's according to a government official. Prime Minister Justin Trudeau invoked the powers last week to cut off funding to protest leaders. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because Travelberg is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
A is to utilize every tool of diplomacy to deter Russia and prevent further escalation. And if that fails, plan B is to fight for every inch of our land.
The Ukrainian foreign minister yesterday alongside Secretary Blinken. Secretary Blinken cancelling his meeting with Foreign Minister Sergei Lavrov later this week. Futures are bouncing this morning, and good morning to you. Up 0.75% on the S&P, up more than 1% on the Nasdaq. That's a tidy bounce from yesterday's losses, Tom. A 10% move from the highs of early January. Correction territory, so-called correction territory. Yields higher on 10s, 197.38. Yields up 3 or 4 basis points. This curve is flatter with a bigger move on 2s. The curve down, Tom, to 36.6. The spread between 2s and 10s.
John, ruble off of dollar. Dollar ruble is called weakens through to 80 into 80.16 right now, which means we need perspective here 6 years before what we saw in Crimea 2008. Kriti Gupta on ruble. Kriti, what do you have?
Yeah, Tom, we talk about the ruble all the time as this gauge essentially for this geopolitical tensions. We got to check back into history, like you mentioned, though, past Crimea into 2008, when you saw that initial surge for the dollar against the ruble, that initial weakening, I should say, for the ruble with the essentially recognition of the breakaway regions in Abkhazia and South Ossetia. This, of course, Georgia. This is the first time that you actually saw Russia kind of have these tensions with some of its Eastern Bloc states. And that's really what set the tone for this kind of volatility in the ruble that you then saw manifest and magnify 6 years later with Crimea. And that's really where you get the $80 significant level. And that's really what my chart of the day shows. Essentially, the ruble throughout history in 2014, essentially on an intraday basis, not closing it.
For you today, I'm going to place order to sell short Japanese yen. And the price I'm looking to sell, 115.55. Please place your order at 115.75 to sell. Okay. Let's see. And position opened at 115.75. Okay. If you want to get the strategy, you need to go to companyeye.co.uk. I'll change color because we sold short color to red. Okay, so other people who just joined us will understand that we sold short. Okay, guys, stay safe and I'll speak to you later.
On intelligence, a couple go-arounds on Russia. Do you have confidence that America has quality intelligence on what the Kremlin's doing?
Yes, I do. I think we're listening to them. I'm not sure if we have a mole or not, or listening devices, but I think we are listening to them. In the intelligence community, there were reports in the last couple of weeks that were astonishingly accurate, forecasting what the Russians would do, and the forecast came true. So yes, Tom, I think we have good intelligence.
So putting all this together and talking about the volatility, you made a point that I thought was pretty stark, that you said suddenly chances of a recession by next winter are no longer zero. Can you walk us through how we get there?
Yeah, I think, obviously, as we all know, monetary policy will get more restrictive. That's an easy call. I think the less appreciated story is fiscal policy. I think we're now going to sharply reduce deficits. We're going to go from $3 trillion down to $1 trillion. $1 trillion is still a lot of money, but that's a big drop in 1 year. And if the Republicans take the House, which I think is quite likely, there will be an even more austere mood in Congress on spending. So both monetary and fiscal policy, I think, would contribute to a weaker economy.
But how does Russia factor into that, Greg?
Oh, gasoline. I think that's probably the main thing, energy, and just the uncertainty. I think that in this city, you've got factions forming. You've got Trump saying Putin's great yesterday. You've got Democrats not happy about all the sanctions because of gasoline prices. And you've got hawks. You've got people like Lindsey Graham who want to spend a lot more and have a lot more sanctions. So with this kind of confusion, this cacophony of suggestions, that doesn't help the economic outlook.
Although, does the former President Trump really represent the Republican view? I mean, honestly, how much dissonance is there when it comes to the domestic approach to Ukraine and the domestic approach, frankly, to Vladimir Putin?
Oh, I think Trump has people who would follow him off a bridge. And his comments yesterday were astonishing, saying what Putin is doing is genius. I'm sure there'll be there already were some Republicans who agreed with Trump on that. I think it's a minority view. I think the Lindsey Graham view would dominate. If John McCain were alive, he would talk about much tougher sanctions, but we haven't seen those tough sanctions yet.
Greg, what is the difference here of our isolationists now? I would suggest the former president speaks as an arch isolationist, but it's different than the 30s and the Chicago Tribune isolationism of the Midwest. What's different now?
Oh, I think we just can't stick our heads in the sand. And I think what's different this time around is that Joe Biden, who I give credit to, has united NATO. I think this has been a big surprise to Putin. I don't think he expected it, especially with Germany. And I think a unified NATO is a real change.
It's an important change, Greg, and I think most people agree with you because it's playing out before our eyes. They're all using the same language, the same tone, the same words. That's really important. Can they actually go through with game-changing sanctions, though, Greg? And I wonder if that's where the divisions actually start to emerge. This is phase one. They've called it tranche one of the effort. Do you think the divisions are going to come further down the road?
Yes, I think there's more, John. I think there'll be more military aid. There'll be more sanctions on Russian debt. I think that would come. So there's a long list of things that we can impose on Putin. And again, I don't think he was prepared for sanctions quite as strong as the ones he'll get over the next few weeks. He didn't get it yesterday, but I think it's coming.
Which one's the one you're looking for, Greg? The sanction that you think is going to be the one that takes him by surprise?
The Russians' ability to float their own debt. I think they're going to have a hard time in Western financial circles selling their paper, and I think that would be a surprise. The other thing, obviously, is much more military aid.
Greg Vanier of AGF Investments, thank you, sir. Of course, Lisa, as you know, the Russians at the moment running a budget surplus for much of the last 12 months. So at the moment, this isn't a major deal for them. For many people, they've been preparing for this moment as well. But certainly, if you can, you'd like to tap the debt market.
How many essays, though, have you read about Vladimir Putin not necessarily following a rational course of action? How many people trying to understand exactly what his goals are? How does this translate into sanctions that work? What is deterrence?
Are you suggesting that NATO is now dealing with an irrational actor?
There have been a number of reports basically highlighting if his goal is power at the expense of all else, how do you deal with that?
Tom, what's your take on that?
My take on it is I don't want to comment. I agree with Lisa that the reports are out there, but it is speculation from a distance, and it's the mystery and the aloneness of Mr. Putin.
No mystery about the bounce this morning. Up 0.8% on the S&P, on the Nasdaq, up more than 1 full percentage point. On 10s, approaching 2 again, 197.90 on a 10-year yield at 4 basis points. From New York, this is Bloomberg.
estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The Fed is in a box, and people don't know what to do.
The market is looking at, okay, is the Fed behind the curve in real terms?
We don't think that they're going to start off with the 50 basis point rate hike.
The preferred strategy is a steady pace of 25 basis point rate increases.
If the market is pricing 50 basis points, the Fed should walk through that door.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thrilled you're with us on radio, on television. And the message this morning within the quiet of the headlines, John, a bounce, a recovering set of markets.
The yields are moving with it, though, Tom. So what do we have? Correction territory at the close yesterday on the S&P. We bounced back, but yields are pushing higher again at the front end and right the way through the curve. Your curve is flatter. We've talked about this through the morning, TK. 2s, 10s, 37.
Let's go right there. It's going to be the focus with our guest here in a matter of minutes. John, the curve flattening at 36 basis points, distant from zero, distant from inversion, but it's that rate of change, the speed that we move at.
We're not far away, so let's talk about speed. Does speed kill? We're talking about interest rate hikes, Tom, one at every meeting. If you're JP Morgan, one at every meeting going into the first quarter of next year. Bank of America say 7. Where does this top out? And what's more important, Tom, the pace or ultimately the destination?
We're going to have to see. I'm on the ruble watch right now, 80.30 on ruble. That's a weaker ruble in the last hour. Futures up 34. We'll do the data in a moment. Lisa Abramowitz, what matters is the auction watch. Fold the auction action this afternoon, Lisa, into curve flattening.
Well, it's the same point that John just made, right? What's the longer-term trajectory for rates? What's the longer-term trajectory for growth? And I keep coming back to the buy the dip moment that people are pointing at. It is because people are not now pricing in necessarily the degree of oil shock, yet does it matter if it's an immediate shock or a slow grind of high prices that just grind people down and diminish some of the consumer appetite?
To both of you, Lisa, let me start with you. What's the buy the dip in bonds? Have we seen buy the dip in bonds, price up, yield down?
Some people are saying that if you go into certain very long duration investment grade bonds, people are looking at buying the dip in duration, basically saying that 10-year yields are not going to climb that much because we're not emerging from that low growth, low inflation kind of regime.
Okay, slam it to full faith and credit, John, on Draghi's Italy. Are we buying the dip in Italy?
That gets so difficult, Tom. That gets so difficult. I'm with you. What does Europe face right now? Faces potentially a growth slowdown. And you talk about an energy shock, Tom. We've already had one in Europe. Let's be very clear about that. Over the last 12 months, we have already had one, with gas prices absolutely surging. So where does the ECB sit here, and what do they have to do? Well, to raise interest rates, they have to unwind QE first. And we're about to find out if BTBs, how they operate in a market where the ECB doesn't have a big presence in anymore, Tom. And we've learned in the past that there's not much of a sovereign. It's more of a hybrid and closer to a credit.
John, I'm going to tear up here. I mean, it's too emotional, folks. We don't make this up. Like, there's no script. I go to Italian papers, Pharaoh with his knowledge nails it, and in the control room, Chart Banner puts up there, on radio you don't see it, but he puts up there that whatever BTB Italian, I don't even know what it is. John, it's like we're a Swiss watch.
I didn't see it. It's there now. 193 on 10s.
It is.
There you go.
We're like a Swiss watch.
Is that what we are?
Speaking of Swiss watch, I'll do the data check to start. Euro Swissy. I'm going to call it indeterminate, but certainly the fear of strong Swiss franc is not out there. John?
I think other people have got other descriptions for us, Tom. It's not a Swiss watch. Futures up 0.8% on the S&P, on the NASDAQ, up a little more than 1%. You had plenty of tang over the weekend. Yields up 4 basis points on 10s to 197.73. We're back away on crude just a bit, Tom. South of 92, 91.79.
Well timed. We start strong this hour with Marvin Lowe, Senior Global Market Strategist at State Street, because his research note goes to the heart of our discussion domestically this morning. And Marvin, it's simple. It's about the relationship of the 2 and the 10-year. Which is of more knowledge right now, the 2-year yield or the 10-year yield on the path to curve flattening?
You know what? We've had a bear flattening. I think that that's ultimately going to continue. It really does signal the quandary that the Fed is in. The normal response function of the Fed being able to take a step back because data is changing, because geopolitical risk is potentially tapping and pulling out consumer enthusiasm is something that they can't take into consideration right now. And it's really hard to see how we get to a point where we don't continue to flatten the curve. And ultimately, that indicates increased either policy mistakes and or increased concerns around recession.
What reason do you have to believe, Marvin, that the Federal Reserve would ignore it, would keep on moving, would keep on hiking?
You know what? It's what you and we have been talking about for the last year. Ultimately, it's inflation. They do need to start to address inflation. I've made the argument that they have, for the most part, been actively managing the process since October with their pivot, if you will. Mortgage rates are 100 basis points plus higher than where we were a few months ago. And we do see mortgage applications starting to fall, but they need to put some action behind all of that signaling. And, you know, March is a fait accompli. And it's really a function of how they signal for the rest of this year within that dots plot, whether you like it or not, and what they do with their projections for the remainder of 2022 and into 2023.
Marvin, it's the dot plot that gets my attention, and it's the dot at the long end of the chart. How far they're willing to push this. From a risk asset perspective, what's more important, the pace of hikes or the ultimate destination?
I mean, I think they're both important. You know, I don't want to be flippant around that. I do think that given the view that they're on autopilot to a certain degree for the next several hikes, it is where we wind up that's most important for risk assets. You've got different durations in different markets, so you need to kind of parse that a bit. Where U.S. has more tech, has more growth associated with that, you are more concerned with the path. Europe has a little bit more value, a little less duration, so maybe kind of that belly of the curve gives you a little bit more signaling. And of course, what the Fed does and what the ECB does is key to that story from a relationship perspective.
When you look at the longer term rate, though, you do think, and a lot of people do think, that Fed actions, ECB actions, will have an impact on that longer term run rate. But there have been a number of studies that show a much less direct relationship between Fed policy, frankly, and controlling inflation in any way, especially once it's gotten to where it is. So what gives you faith that the Fed does have control at this point at a time when inflation is running hot and people are foreseeing a problem in the economy longer term, regardless of what the Fed does?
Yeah, absolutely. And that really is the potential challenge that the Fed has, is their ability to ultimately influence that inflation discussion when it's not the normal set of circumstances that are driving the inflation story at this point. Certainly shortages and the supply chain is still a big part of this. Energy is something that they would normally look past. However, when you put them all together, you're in an environment where it is going to tap consumer demand. However, increasing rates will influence that. Higher gas prices, higher shelter costs will impact that, but they won't impact the supply chain. And we should look into regime change as a potential tail risk in this discussion. But certainly, we also do think that some of these supply chain issues will work their way out, and lower demand as a result of all of these other things coming together does get 2023 into a position where their actions now are going to have an impact.
What's your highest conviction right now, Marvin, in markets?
You know what? I've been flattening of the curve for a while. I'm going to stick with that. It's the one thing that seems to be clear. There's so many cross currents to deal with now that, unfortunately, that is something that will continue. And I would say that inversion is something that might be hard to avoid as we get later into this year.
As many people have said, maybe before year end. Like you, Marvin. Thank you, sir. Marvin Lowe there of State Street, as always. Thank you very much, sir. Getting some headlines from Interfax. I want to bring you very quickly. Russia will give a strong response to US sanctions. The Interfax report goes on to say, Tom, they cite Russian Foreign Ministry on the sanctions response, that Russia will give a strong response to the US sanctions announced in the last 24 hours.
Just moments ago, John, United Kingdom to convene meetings of banks, regulator on Russian sanctions. I don't know if they do that at the bar of the Ned, John, but that'd be as good a place as any. I mean, what do you say to banks and regulator on Russian sanctions?
And the media regulator looking at RT as well, Tom, and what they're calling a disinformation campaign in the UK, and maybe taking RT off the air in the United Kingdom, Tom. Those reports coming. And that was talked about in PMQs in the last hour too.
And it underscores, John, the next step here as we wait. And let's be clear here. It is a holiday in Russia, right?
It is a holiday today, yeah.
Okay, I guess that bears a moment here. I don't know, John, I see a better stock market. I got a Dow lift, I got SPX lift, I got the VIX in a stick. Ruble even gave way on those Russian headlines.
It's a strong bounce. It's a strong bounce. Lisa, you see it on the NASDAQ up more than 1%, on the S&P up 8 or 9/10%.
Well, what was it? What's the exposure in the S&P to Russia right now?
The B of A stat, 0.1%.
0.00. I mean, honestly, at a certain point, the direct ramifications are negligible for a lot of developed market assets. And there has been so much isolation of Russia at this point that it really comes down to the oil and gas transmission mechanism, which is a lot harder to game out. And so I think that that's what you're feeling in markets, is a bit of a sigh of relief that we didn't see the worst case scenario just yet.
And John, what's so important here is to put it in perspective. The Russian GDP, I think it's a little bit bigger than New York State, just to give you an idea. Of course, with a huge oil impact there, maybe this year it'll be larger because oil's at $90 a barrel. But the per capita GDP, John, which we mentioned 5, 6, 7 days ago, bears repeating. You look at Germany, 47,000. Finland, just below that as well, 40 whatever thousand. And Russia's way down at a 10,000 level.
That speaks to the failure of Russian leadership to really build out the economy over the last few decades. What it doesn't speak to is just how dependent Europeans are on some of the things they do produce in Russia, namely energy. And Lisa used some interesting language, and it's important to recognize the word direct. The direct exposure into the S&P is 0.1%. Russian sales, 0.1%. The indirect exposure to energy prices, to a potential recession in Europe, to a potential deceleration in consumer spending, maybe even contraction, they're the things that ultimately matter to us, which is why it's tremendously difficult to price, one, and two, ultimately to try and get your hands around what this means for the Federal Reserve as well next month and beyond. Futures up 0.8% on the S&P from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. Ukraine is moving towards declaring a nationwide state of emergency. That would allow Ukrainian officials to impose restrictions on movement and media following Russia's recognition of 2 self-proclaimed republics in Ukraine. Meanwhile, President Biden's first round of sanctions on Russia was seen as underwhelming. Members of Congress from both parties want him to do more. And the fortunes of Russia's super rich have fallen $32 billion this year, and sanctions from the conflict in Ukraine are likely to destroy even more wealth. Gennady Timchenko heads the list of Russian billionaires who've seen their fortunes drop. According to the Bloomberg Billionaires list, almost a third of his wealth has disappeared this year. He now has a fortune of about $16 billion. In Hong Kong, the government is trying to offset the toll the escalating virus outbreak has taken on the economy. Eligible residents will get almost $1,300 in spending vouchers. Authorities have also earmarked more than $2.5 billion for other antivirus needs. Hong Kong's economic growth is expected to slow to as little as 2% this year. That's after growing 6.4% in 2021. And Lowe's is signaling that Americans' increased spending on home improvement projects still has room to grow. The chain posted better than expected quarterly sales and raised its outlook for the full year. Lowe's also said operating margin improvement in the fourth quarter. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Earnings season continues.
To the Metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
If there is a full-blown invasion, as U.S. intelligence seems to be warning, I also think Putin will go further. I don't buy what I'm seeing in some investment research that we're going to see a de-escalation. I see the opposite. We'll see another round of sanctions. We are in what Clausewitz called the fog of war, and Russia has nuclear weapons.
In the fog of war, the words of Tina Fordham, the Avonhurst head of global political strategy, with futures this morning up 0.8%. Good morning to you all. We do have a bounce on the Nasdaq, up a little more than 1 full percentage point. Yields up 4 basis points to 197.73. The curve's flatter. Crude backs away, down 0.2 to 91.71. And euro dollar, firmer euro, weaker dollar here on that currency pair anyway. Euro dollar 113.44. That's some of the price action. Here are some of the headlines from the Ukrainian president speaking right now to reporters, Tom, expecting more sanctions on Russia. That coming from Zelensky just moments ago.
Yeah, it's out there now, and there is a set of headlines from Europe. We'll continue to keep you abreast of these right now, but what we've got is the markets with a nice lift. Right now, with clarity, Javier Blas, of course, with his wonderful book and with Bloomberg Opinion writing on oil worldwide. Javier, I want you to give us an update on how Mr. Putin is paid when he exports oil, natural gas, and the rest. I understand oil's dollar denominated. Russia and Rosneft made a shift to euros. But what's the real story? Is it in euros, dollars, or rubles that he receives as larder for oil?
It's mostly in dollars. Russia still sells most of his crude oil and refined products in US dollars. Some of it is also in euros, and then the central bank in Russia converts everything into local currency, into the ruble. A lot of the sector is controlled by proxies of the Kremlin, by state-owned companies or companies where the state has a lot of influence. So at the end of the day, the money that natural resources exports of Russia goes into the Russian economy, and that really leaves the aims of Vladimir Putin.
Do you have, like you do on, say, the price that Saudi Arabia needs to have a fiscally successful budget, do you have in your head dollar or euro ruble that matters for Mr. Putin as we see ruble unravel?
I think that at the current prices of oil, he's just doing fine. $75 oil, Russia is going to do very well, and I think that Russia can survive very well also with oil at $60. Probably that's more than enough.
Javier, how much confidence does Russia have, does Vladimir Putin have, that Germany cannot come through with its promise that eventually it will be independent of some of the gas resources from Russia, and that they have other supplies?
I think that the key question there is eventually. Eventually is a very long time in foreign policy, and when you are fighting effectively an economic war with Russia. Can Germany say goodbye to Russian oil over the next 15 to 20 years? Yes, it can. Can it do it in the next couple of years, what is really matters? No, there is absolutely no way that Germany can do that unless you are going to be shutting down huge swatches of the German economy. So in the short term, that is an impossibility, and Putin knows that.
So given that, are you a little bit surprised at, I don't want to say the complacency, but the sigh of at least a pause here in the oil markets as we reassess the landscape, the sense that perhaps we can avoid that oil shock that a lot of people were gaming out yesterday?
Well, I think that the White House has made very clear that for now it's not targeting oil and gas exports. The Europeans also made the same signal. They don't want to go there. And Putin so far is signaling that he doesn't want either to use oil and gas as a weapon in this conflict. So that's the reason that the market really pared down. And in gas in particular, let's not forget, we are at the very end of February. It's very nice weather here in London. We are out of the wars of gas consumption in Europe. In another month, gas consumption in Europe will really collapse, as every year does, because the springtime arrives. We use in Europe a lot of gas for power generation, for
for the industry, but the big consumption center is heating, household heating, and therefore the gas market, even if something really bad happens right now, is not the same happening at the very end of February, and also with a very relatively mild winter, that if something bad has happened just around Christmas.
Javier, how quickly could we close a deal with Iran?
I think that we may have a deal. I'm going to go here out of a limb. I think that either we have a deal by the weekend or very early next week, or we just simply don't have a deal.
Does that move the dial enough?
In the next week.
Javier, if that happened in the next week, talk to me about how much capacity they have, how quickly they could bring that back online and export into the market. What are we talking about? What kind of numbers, and does it make a difference?
It does a hell of a difference, and the world really needs Iranian oil if we are not going to see much higher prices from here. Well, the first step is that Iran has a lot of oil on storage, both floating in tankers and also onshore at home in Iran and also overseas in China. That oil can hit the market almost immediately, within 24 hours. The moment that Iran is allowed within the New Deal to sell the oil, that oil is going to be hitting the market. How much oil is there? There are different measures, but anywhere between 60 and 100 million barrels on storage that could hit the market very, very quickly. Then how quickly Iran can ramp up, I will not bet against Iran. Last time, the market was expecting 1 million barrels will take a year. It took only 6 months. I don't see why this time is going to be different. So another 1 million barrels in 6 months.
Javier, I wanted to give you the opportunity to issue a correction as well if you wanted to. A man from Spain in late February saying the weather's good in London. Javier, is the weather actually good in London?
It's better than I expected this morning.
Okay. You didn't take it back quite. Javier Blas there of Bloomberg Opinion. The weather's never good in London at the end of February. But anyway, I digress. Crude, 91.87 on WTI. Brent Tom, 96.93. And you heard the words there from Javier Blas. We either get a deal done before next weekend with Iran, or we don't get a deal done at all.
And it's the delicious soup that we're in. And I'm going to go back to 6 o'clock this morning, John, with the release of the Bruce Kasman note with Kasman and Aziz at JP Morgan, where they aggressively walked back from the not call, but the fan distribution that gets you to $150 a barrel oil. They just say there's too many supply items out there, as Javier outlined, that we're not going to go there. We're going to go to something lower, a better price.
Well, let's talk about a better price, because leadership here in America, Lisa, they don't want it in the hundreds for sure. They don't want it in the 90s either.
But they haven't really given any policy prescription that can avoid getting there should there be that oil shock. And so many people are counting on demand actually waning as we get into the latter part of the year, that basically you're going to get that big upsurge where everyone wants to travel post-pandemic, and then it'll calm down. You know, so many variables to determine how much is going to be necessary in the meantime before we normalize.
Or get stuck in Atlanta on the way to going somewhere and not being able to travel anyway. You never finished the story for the audience.
Oh, I'm sure.
So you went down to Atlanta, got stuck there
for a night.
For a night, and then had to come back up to New York.
It was an amazing vacation.
And that was your long weekend?
With kids, which was really fun.
Are they refunding you?
They are refunding me, but you know, it was haggard.
Would you like to give the airline a shout out?
I don't do that.
We just a shout. Just say, is it a hub of a major airline that is in Atlanta?
Yes, it is, and it has some relevance to some of the COVID acronyms.
Okay, well that's good to know. Tom, I think that was fairly discreet, wasn't it?
Yeah,
that's allowed.
The Four Seasons in Atlanta is just phenomenal.
From New York, this is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Live from New York City on TV and radio, this is Bloomberg with your equity market bouncing up 0.7% on the S&P. On the Nasdaq, up a little more than 1 full percentage point. Yields are higher too, up 3 basis points on 10s to 197. Let's call it 197, 196.86 to be precise. Crude backs away, down 0.1% and 91.78. The focus at the moment, there are many. Here's one: sanctions out of Europe on Russia. This from the Polish president, Tom, calling on Russia to de-escalate tensions and withdraw troops. He goes on to say he calls for serious sanctions against Russia, which implies he thinks what we've heard so far, Tom, is not serious enough.
And the movement from Kiev west to Lviv, and of course on the Polish border as well. It was an essay in the Financial Times a number of days ago from Jeffrey Sachs of Columbia University, talking not of appeasement, but how do we, after the debris of all this, move forward with Russia? The authority of Jeff Sachs here is truly, truly enormous and goes back to January of 1994 with his advisement to a Yeltsin regime that then changed to something different. When Jeff Sachs got off the airplane at JFK, that interview was shocking. Professor Sachs joins us, of course, of Columbia University this morning. Jeff Sachs, we all got Boris Yeltsin wrong. Do we get Mr. Putin wrong?
Well, I think we've got our own policies not right. And, we have been on a very provocative course of really NATO enlargement seen by the Russian side as encircling Russia, a point that has been made actually for more than 30 years, first by the Soviet Union, by Mr. Gorbachev, and then by President Yeltsin, now by Putin. We don't want to think about that in the U.S. We don't want to discuss it. We're dishonest because the West, the leaders said clearly to Mr. Gorbachev and to Putin, and to Yeltsin, no enlargement to the East. Then Clinton decided because of the pressures domestically and from Central European countries that NATO would enlarge. It was predicted by many at the time, including Clinton's own defense secretary, William Perry, that this was a very dangerous and provocative move. And now we're here. We need diplomacy on our side. All we're doing right now is sacrificing Ukraine in the name of a theory. Because if you talk to senior officials, they say, oh, there's no way Ukraine's actually going to join NATO. But then they say publicly, of course, Ukraine has every right to join NATO. If you put the two together, it's the worst combination for Ukraine's security.
Jeff, what's so important here is I've got Jeff Sachs, the liberal from Columbia, on the same page as Mearsheimer of Chicago, the arch-conservative realpolitik. I mean, that is truly extraordinary. To steal a phrase from a younger Jeff Sachs, what is the diplomatic shock therapy to jumpstart a legitimate dialogue to come to a good resolution here?
We need basic points agreed. Russia out of Ukraine, Ukraine's sovereignty assured, NATO not enlarging into Ukraine, the Minsk II agreement being implemented. 4 basic points. They're not so hard to come to the table, except actually the difficulty is on the NATO side. Well, NATO says, oh, everyone has the right to join, as if it's some great, somehow moral right to have a military alliance that increasingly runs up against the border of an antagonist. That's not a right. That's just imprudent is what it is.
But Jeffrey, you're talking about diplomacy. Can we have diplomacy if people question whether Vladimir Putin is a rational actor?
It's a great question. You cannot test that theory if you don't have diplomacy. What Putin said in his speech a couple of days ago is, we called for new security arrangements. The United States would not even discuss them. That is the truth. The U.S. said, first moment, NATO is open for enlargement. It is the right of Ukraine. Well, I don't call that smart diplomacy. And then when the response is a failure, which was predictable, we say, well, nothing could have worked. My view is we should try real diplomacy. It might not work. It might start with the premise that the counterpart is just a madman. It's true in negotiations throughout history, is if you start with the premise that the counterpart is just a madman, if you start with that premise, you will absolutely end up in conflict. There's no way to reach an agreement on that starting point. Yeah. It may be true that the counterpart isn't interested in negotiation, but you can't find that out by talking to yourself. So you have to talk to the other side.
Jeffrey, we're talking tactics right now and how to avoid some sort of altercation, but longer-term strategy, you specialize in sustainability, and I do wonder what type of investment would be necessary now in order to immunize both the U.S. and, frankly, even more so the European economies from the vulnerability of dependency on Russia for oil and gas.
The truth is we ought to be dependent overwhelmingly on our sunshine. That's the whole idea of the decarbonization agenda, which is a massive increase of solar and wind power to replace fossil fuels. Why are we in yet another fossil fuel crisis? By the way, this is where I entered economics. I won't tell you how many decades ago, writing about the oil shocks of the 1970s. We can get away from that because if we're relying on our own sunshine with solar fields or on our offshore wind or on our wind in the U.S. Midwest, we are not going to be suffering what we're going to be suffering right now. So that's actually a pretty straightforward approach and the one we ought to be taking anyway.
Jeff, in the time we've got left, and very importantly, you make the assumption here that the West is talking to itself instead of talking in a more formal diplomacy to the oddities of the Kremlin. The Democratic Party and the liberals of the Democratic Party and progressives all agree are going down in flames at the next election. Whether that's true or not, we'll find out in November. Are the progressives in this nation guilty of talking to themselves and not reaching out for compromise with the Biden moderates or indeed the GOP moderates?
I just think there's a lot of bad strategy going on. I am unimpressed with the diplomacy of this administration. I kind of, well, let's just say I'm unimpressed. And I'm unimpressed with the strategy on the domestic policy. Senator Joe Manchin, with whom I often do not agree, put forward a very reasonable proposition: raise taxes, use some of it to reduce the debt, use some of it for the social programs. That's a point of reaching an agreement now.
Why can't the left meet the gentleman from West Virginia? It clearly, it broke for the left. How did it break for the left?
Well, it has to start with the White House, frankly. That's the job of the president and the White House, to coordinate. How you could have this situation and not reach an agreement is really disappointing, frankly, because there is an agreement to be had. Even Senator Manchin sketched it out in the last couple of weeks. I said, okay, here we go. But they don't move. And it's really not so understandable, Tom. It's a good question. I don't have a good answer for it.
Professor, thanks for being with us today. Jeffrey Sachs there, Columbia University. With several arguments there, Tom, and I think the one that's going to get a lot of attention is this idea that somehow NATO has antagonized Russia by pushing NATO membership right up against the border. I'm going to be very clear on this. We're not talking about Russia threatening Estonia or Latvia or Lithuania, countries that are very close to the Russian border, because they're all NATO members. And I want everyone to go through a thought exercise here as we start to think about the Vladimir Putin argument about all of this. Would this be happening if Ukraine was a NATO member? Would this be happening if there were nuclear weapons still in Ukraine? Would we be going through this right now? Because there are two sleeves across the Russian border, east of Europe, as you know, Tom. To the north, there is Estonia, Latvia, and Lithuania. And right now, we consider that to be quite peaceful, don't we? They're NATO members. Then you've got Belarus and Ukraine. Belarus is an extension right now of Russia in the minds of many people, and the tension is in Ukraine. So when I hear this argument, the argument that Vladimir Putin keeps making from the Russian president, echoed by people here in the United States of America, I think we've got to go through that thought exercise ourselves, Tom. There is a peaceful sleeve up against the Russian border. They are NATO members. There is no real threat to them right now, in the same way, relatively speaking, that there is in Ukraine, who is not a NATO member. We've all got to go through that thought exercise and not just jump on this Vladimir Putin bandwagon, that it's somehow the aggression or they've been aggravated by NATO membership pushing up against their border.
This is well in excess of a decade debate. As I mentioned, John Mearsheimer of Chicago, widely considered to be the one that launched this debate over the future of NATO in the very long border with Russia. John, to me, the distinction between the band up north and down south is a warm water port, which is an ancient Russian fixation going back to Peter the Great and certainly Catherine the Great. And the answer is the geography of the moment is the great distinction.
Tom Keene, Lisa Abramowitz and Jonathan Ferro. We do have a bounce in this equity market, up 6 or 7/10% on the S&P, up 28 points on the Nasdaq 100, up 1 full percentage point. A bounce back in the equity market, but that flatter curve, Tom, gets your attention, gets Lisa attention, it gets my attention too.
Yeah, and the 5-year auction this afternoon is going to get my attention. I mean, you know, they're going to come in and it's going to be huge.
Well, you mentioned the belly of the curve earlier with Willie Caesar.
Yes.
And the belly of the curve does get interesting, Lisa, because that's where the rate hike dance further down the road takes place. How far they can push it, for how long can they push it?
Which is the reason why I thought that the flattening in that denomination was particularly interesting, basically highlighting the deteriorating prospects in the near term.
Coming up on the Open, Aaron Brown of PIMCO. Looking forward to that conversation after a 10% correction on the S&P. Is it a correction that you want to buy? From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishka Gupta. Russia's President Vladimir Putin says he's ready to pursue diplomatic solutions to the Ukraine crisis, but only if Russia's interests and security are guaranteed. Putin spoke after the US and its allies agreed on a first set of economic sanctions against Moscow for its actions in Ukraine. In Canada, banks froze about $6.1 million in just over 200 accounts under emergency powers meant to end the truckers' protests. That's according to a government official. Prime Minister Justin Trudeau invoked the powers last week to cut off funding to protest leaders. The U.S. Transportation Department is awarding $450 million in grants to ease port traffic jams. Major ports such as Los Angeles and Savannah, Georgia, are eligible. A fourth of the money will be allocated to smaller ports. Congestion and inefficiencies at the biggest ports have strained U.S. supply chains during the pandemic. Auto parts supplier Tenneco is going private. Affiliates of Apollo Global Management will acquire the company in a $1.6 billion deal. That represents about 100% premium to yesterday's closing price. Including debt, the deal has an enterprise value of $7.1 billion. Tenneco's stock price has plunged 85% over the last 5 years. And the European Union has unveiled new rules that will allow users to transfer data from products like Amazon's Alexa or a Tesla car. Cloud service companies will also be forced to make it easier to switch between providers. Companies say the rules could complicate international data flows. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the
compost that breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
The only question is, how much will investors panic and liquidate? And we have seen redemptions the last few days. That, unfortunately, tragically, that's normal. Market drops, and as much as I'm saying, hey, it's a buying opportunity, people hit the panic button. And I suppose after today, we'll see inflows.
Andrew Sliman there, Senior Portfolio Manager at Morgan Stanley. Really a terrific 2021 for him. Not a surprise, but certainly his statistics show an ability to move higher and outperform the Standard & Poor's 500. Futures up 30, Dow futures up 202. VIX was at a stick, now 0.82. Good points, 27.98. Lisa Bramwitz and Tom Keenan with us right now. Barry Ritholtz on what is required when pros speak on market pullbacks and all the language, correction, bear market, whatever. Barry, it is pros in search of catharsis. A number of our experts today said they really haven't seen blood on the streets, as the phrase goes. Do you buy the idea we need catharsis to move higher?
You need catharsis to move higher when you're in the midst of a generational sell-off. You know, October 02 or March 2009. Those catharsis technically translates as surrender, when holders just can't take the pain anymore, throw out the baby with the bathwater and surrender to the pain. This, a 10% pullback, you know, last year was aberrational. We didn't even get a 5% pullback. On average, we should see a 10% pullback every 18 months or so. This is what markets are supposed to do. They go up
and they correct as well. Now, Andrew Sliman of Morgan Stanley, who has a phenomenal track record over 36 months, Barry makes real clear in green letters in his research note, this is a buying opportunity. How do you find and identify buying opportunities?
So I think a better approach for the average investor than relying on their instinct or their gut or what they read in on the sell side research or see on TV or hear on radio is to have a plan. And if you like the concept of buying the dip, well, you should have a plan to dollar cost average every paycheck or every month or however often you want to do it, so that as markets going up, you're just adding to winning positions. And as markets are coming down, you're buying things when they're cheaper. Every academic study that's been out there said that's much more effective than trying to go with your instinct or some sort of methodology that you think is going to outperform the market. Very, very, very few people have been successful doing that. 2% of fund managers and traders. The average person, set and forget is a much better strategy.
All right, but let's say people are coming up with a strategy right now for the next couple of months, and I understand that there are people who have long-term kinds of capacities, but at this point, there is this short-term opportunity that some people say, given the fact that you've seen massive drawdowns in specific names in specific sectors, it's been so idiosyncratic in terms of which areas have been targeted. How do you determine when something is cheap or expensive? How much do you go to the specific sectors that have gotten beaten up the most?
So if you want to be a stock picker, and again, very few people are especially talented at that. In fact, we all know the bold-faced names because they are so rare, but you have to really understand not only why things are selling off, but understand what you may not know or what may still be somewhat random or unforeseeable when you're picking stocks. So, yeah, stocks like Peloton got cut in half. Did they run up so much because of the lack of access to gyms during the work-from-home pandemic era? Are you making the bet that we're going to have another variant that's going to send us back into lockdown and people are going to be buying Pelotons?
Yeah.
Or has their heyday come and gone? The same thing, to do with their entry into the S&P 500. Now that's there, are they really a $1 trillion company or close? Are you buying the dip and expecting a return to what was an aberrational issue? That's a really difficult question to answer. And hey, someone's got to be on the wrong side of the trade. There are two sides to every trade. Half the people will get it right, the other half will get it wrong. I can't answer you about certain companies because there's so many variables. Tell me when the next contagious variant comes out, and I'll tell you whether or not to buy Peloton here.
Barry, what are you doing right now?
Just the same thing we always do. We are.
Are you holding more cash?
No, absolutely not. We manage money for 1,600 families, nearly $3 billion in assets, and these are long-term. Most of it is taxable, but about 40% are qualified accounts, and this is for retirement, for generational wealth transfer, for philanthropy. Our clients think in terms of decades, not in terms of the next month or the next quarter.
Barry, thank you so much. These tumultuous times. Barry Ritholtz there, of course, writing for Bloomberg and Opinion, a hugely successful podcast as well. Lisa, I see a lift in the market, and I'm going to say it sustains. And I'm sorry, to me, given the mix of headlines from Rosalind Matheson's team on all of these governments, to me, dollar ruble is still the litmus paper of the moment. And to be above 80 shows some form of vote on the combined sanction announcements.
The interesting, I'm glad you pointed that out. You're seeing a weaker ruble, which seems to be suggesting that there is a successful isolation of Russia by Western allies. But you also see ongoing resilience in equities, which a lot of people have pointed to, basically as an indication that a lot of these sanctions were not anywhere close to how bad people thought that they were. So if we get these headlines from the leaders of Ukraine and Poland and the like saying that they're expecting a lot more sanctions, will there be something to tip the boat and actually tip us back into being more concerned about a more dire situation, or have people basically moved on?
Well, I'm not even seeing one tranche of sanctions. Against tranche is the key word there, is stated by the Prime Minister, and I'm not assuming one or two tranches of sanctions. It may be a wide set given the actions of Mr. Putin.
Just stepping back, though, if you take a look at the slew of issues, they just add to the conundrum for the Federal Reserve. And I do go back to the central banks because ultimately people are counting on them to be able to stave off some of the inflationary inputs, including the oil prices. That would be the main node of contagion here should things escalate further between Russia and Ukraine. And if you look at the inflation in wages, if you look at the inflation in some of these underlying components, they're not going down. And how much is that going to tip the hand regardless of what happens between Ukraine and Russia?
Let's set the morning for you. And again, Lisa, with that 5-year auction this afternoon, which will be very important. We've got a lift in the market, futures up 32, and the VIX, and I'm going to round it down to a stick, 27.87 is a far more constructive number than the 31 that we saw a number of days ago in the real angst. Yield curve, you know what? You've got flattening. There's no other way to put it here, not like it was 2 hours ago, but nevertheless, the 2-year yield dynamic versus the 10-year. Oil south 96.86 on Brent crude. And yes, the ruble, as we move through the morning, 80.04, above 80 on Mr. Putin's ruble. Please stay with us. We drive forward the conversation with the former ambassador of the United Kingdom to the United States, Ambassador Westmacott, at 12 noon.
Airport, and behind me you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
From New York City.
In London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We have got a bounce here. Yields higher, equities higher. From New York City this morning, good morning, good morning. Equities up 0.7%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, the S&P entering correction.
Equities have already had a 10% correction, YTD.
There are a lot of cross currents for sure.
You have two distinct risk drivers.
We've got a geopolitical environment.
Tensions with Russia and the Ukraine.
But also what was going on before that.
The angst around the first Fed rate hike.
Central bank's been behind the curve.
And the market has priced them in a very different way.
Well, I'll tell you what, it's gonna remain volatile.
Risk assets can definitely grind lower from here. It's a read and react market. There's lots of potentially negative news flows. We're being very, very patient, very, very cautious.
The next couple of weeks are likely to continue to be very volatile.
You're still in a bend, haven't broken mode.
The only thing certain this year was uncertainty.
Joining us now is PIMCO's Erin Brown, BlackRock's Tony DeSpirito, and JP Morgan's Clinton Warren. Erin, I want to begin with you. Not every 10% correction is created equally. I want to understand from your perspective if this is one you buy or stay away from.
I think over the next couple of weeks, we're still going to be in a volatile period. So really timing the bottom is difficult. But I think when you step away and look at the fundamentals, the fundamental picture for equities is still quite strong. And I think, I've been somewhat heartened to see that the markets are not panicking. And when you look outside of equities, if you look at credit spreads, if you look at inflation swaps, if you look at 2s, 10s, they're still telling you that the fundamental picture for equities is still okay. And you are seeing fundamentals firming on the economic front. So I think over a medium-term perspective, you would do well buying here, but the next couple of weeks are going to continue to be choppy. And certainly we could see downside risk from here.
Erin, given where 2s, 10s are, and you say that's the okay to carry on buying equities, do you think it is okay with 2s, 10s south of 40 now and heading in a direction where we go flatter, flatter, flatter?
Right. Well, I guess the point that I'm trying to make is that you haven't seen significant volatility. You haven't seen a significant flight to quality on the moves of late, particularly with regard to the geopolitical situation. I do think, though, that as we move later cycle and as the curve continues to flatten, it does start to, I think, bring up concerns regarding whether or not we're moving very late cycle and whether or not a recession is sort of knocking on the door for markets. I think we're too early yet to price that in, but certainly that is going to be a concern for markets as we move throughout this year.
Clinton, it's the back end story, the back end of 2022. This is something Mike Wilson of Morgan Stanley's been talking about. Here's the quote from him. We think Fed tightening is well understood at this point, even if it's not fully discounted in multiples. From here, the depth and duration of the ongoing correction will be determined primarily by the magnitude of the slowdown in the first half of 22 and looking out to the back end of next year. Your thoughts on that, Clinton? Your take at the moment?
Yeah, I mean, my position is don't fight or fear the Fed. I mean, rates are at such low rates that we have a lot of room to go before they become punitive. I'm saying if the Fed hikes 8 times, gets to 2%, we're still at a non-punitive track for equity markets. So I'm not fearful of the Fed moving, and I think some of this recent news with Russia and Ukraine will probably put pressure on the Fed to not go 50 basis points on March 16th and more like 25 basis points. But one of the things I am watching, to your earlier point, John, is that the curve is flattening, and I don't believe that we're going to have a yield inversion, but it does put some worry into my mind if the 10-year doesn't move. We need to get that 10-year move in, and hopefully with the Fed stop purchasing some of the longer-term bonds, we'll see the Fed move or the 10-year move up. But it's something that we're watching, and it is a risk to market.
Tony, I want to pick up on what Clinton just said. Don't fear the Fed. Let's talk about that. There are 3 ways of looking at this: the start of the journey, the speed, the destination. What matters here for you? The pace, how many rate hikes we get in this year, say, or the ultimate destination, how low that ultimate peak is?
It's clearly about what is the destination. I don't think the pace matters so much. Right now, the Fed is behind. It needs to catch up. It's achieved its goals. We have relatively full employment. Unemployment's at 4%. We've made up for historical undershoot of inflation. So I think that's good. So we're now at a point where the Fed can eliminate or move away from this extraordinarily accommodative policy it's had, the emergency policy that it's had. And so I think that's good. And then when I look at markets, I see 2 things. I look at fundamentals, which are still very strong. They're moderating from the pace that we were at last year, but earnings are still going up for the S&P 500. And valuations are down by about 10%. And so I see that as attractive. And ultimately, you look at where the 10 years today, 2%. It would take a 10-year of about 3 to 3.5% before I would no longer look at equities as the most attractive asset class.
150 basis points higher than where we are, Tony. Really? Why that high?
Yes. That's the math of our dividend discount model. We look at the historical equity risk premium. We look at the current equity risk premium, which is way higher than historical averages. And that's the number the model comes out with. And it makes sense based on long-term history. The stock market never fully incorporated ultra low rates. That's the punchline.
25 minutes away from the opening bound. The punchline this morning, equities up for now, up 0.7% after closing at 4-month lows in yesterday's session. With more on this, let's get to Taylor Riggs. Hey, Taylor.
John, it was a big day on the closing bell yesterday because we finally closed in correction territory on the S&P. We'd gotten there on an intraday level, but this was the first time since March of 2020 that we had closed sort of in that quote correction level. Now, sometimes this feels broad-based, but if you take a look at the 6 stocks that are accounting for 35% of the drawdown in the S&P 500 year to date, it is the big tech stocks, right? Microsoft, Facebook, Apple, those are the big draggers here on a year to date basis. And I just want to point out from the high in September, Facebook, it's off 47% from the high in November. Microsoft is off 16%. So what that means from a sector levels, we brought it out a little bit, is communications, of course, already in a bear market. Those are off more than 20% from the recent highs. Healthcare, technology, discretionary, also down more than 10% from the recent peak. So what that means, we broaden out, you've this big drawdown, but indeed, again, if you take a look at the terminal, the first time since March 2020 that you're really getting that full drawdown that we've had, closing levels at 10%.
Taylor Riggs, thank you very much. The team over at Citi looking at things like this, the US versus, say, Europe. Quote, an important driver for allocation decisions is growth and the evolution of US yields. A re-rating of growth higher leads to a style leadership rotation. Hence, investors reallocate more to global trade exposed Eurozone equities. Now, Erin, a lot of people piled onto that story week after week to start the year on this program. Then all of a sudden, we face a bit of a problem in Europe. Can you walk me through how you're approaching markets globally, from region to region?
I think that Europe right now is still too early to buy, particularly with the geopolitical risks that, continue to loom over the market. And I think it's going to have a much bigger impact on European equities than it will certainly in the US, where, Russian exposure to US equities is incredibly modest. It's, less than 1% from a revenue perspective. But there still remains risks to Europe, particularly with respect to the energy crisis. So while there's certain pockets of European equities, which I think look attractive, particularly the European banks, for the market overall, I think it's still too early to buy. And I'd be really focusing on quality bets in the US as where to pick my spots for this year.
Tony, your thoughts on the same issue?
Yeah, so I still favor the US market. It's a higher quality market. Obviously, there's less turmoil in the US. And so I still favor the US. Within the US, I think value equities look particularly attractive given the recent rise in inflation and subsequent rise in rates. That definitely favors value equities, and we've seen that play out this year.
Clinton Warren, final word.
Yeah, sorry to give you the trifecta, but I agree with both Tony and Aaron. We are favored the U.S. From a geographical standpoint. Within the U.S., we're favored large cap over mid and small. And within U.S. large cap, we are favored the defensive sectors, cyclicals, dividend-paying stocks. So we like equities over bonds and cash. It's just going to be, you got to be a little more specific in where you're going, and high quality is where we are going for 2022.
We'll keep building on where you're going for 22. Clinton's staying with us alongside Aaron and Tony. Your equity market positive 0.8%. Lucky to have Taylor Riggs with us for the hour. Taylor, looking at some movers this morning. Hey, Taylor.
Yeah, let's take a look at the pre-market. And John, a different story when we're taking a look at Lowe's versus Home Depot when we sat here exactly 24 hours ago, right? Because Home Depot was warning about some of the inflation and those supply chain costs. Lowe's is the opposite. They're actually saying, you know what, 2022 may not be so bad. They're looking at comps to be -1% to 1%, but it had seen comps as much as 3% lower. So you are getting a little bit of a marginal improvement. Take a look at Stellantis. Look, they're looking at operating income and positive industrial free cash flow. Analysts are saying it was much better than expectations, even for some of the big bulls on the street. Palo Alto is a really interesting one here because the cybersecurity company beating expectations and consensus. Stock now been raised to a neutral at JP Morgan, and Dan Ives at Wedbush seeing huge tailwinds here for the cybersecurity sector. Finally, we'll take a look, as you can see there, Activision Blizzard. Our chief gaming correspondent, Romain Bostic, says delaying these video games, it's not a good sign, John.
Is he a gamer?
He's more than a gamer than I am.
I did not know that. I don't think I've had a video game for about 30 years, maybe, Taylor. But okay, Taylor Riggs, thank you very much. Your equity market set up as follows, going into the opening bell about 20 minutes away. Just a bit of a bounce here. Coming up next, the US taking a measured approach to its debut set of sanctions.
We're implementing full blocking sanctions on two large Russian financial institutions, VEB and their military bank.
Do those sanctions lack teeth? That conversation, up next.
this chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Tuesday night, March 1st.
We are ready to respond decisively.
Bloomberg brings you live coverage of the State of the Union address.
America is back to work.
Hosted by Joe Matthew.
Inflation is kind of the #1 talking point so far.
Reaction, analysis, and what it means for Wall Street.
He did leave this door open.
Those are the words Democrats wanted to hear.
Biden may get a little bit of a lift on this.
The State of the Union address, followed by the Republican response. Coverage begins Tuesday night at 8:30 Eastern.
We're implementing full blocking sanctions on 2 large Russian financial institutions, VEB and their military bank. We're implementing comprehensive sanctions on Russian sovereign debt. That means we've cut off Russia's government from Western financing.
President Biden imposing fresh sanctions against Russia while warning Americans about potential spillover effects here at home.
Defending freedom will have cost for us as well, and here at home. We need to be honest about that. My administration is using every tool at our disposal to protect American businesses and consumers from rising prices at the pump.
Joining us now is Anne-Marie down in D.C. Morning, Anne-Marie.
Good morning, John. We heard from the president there is tranche 1. That is what the administration is calling when it comes to these sanctions. And his deputy national security advisor for international economics, Dalip Singh, said yesterday that this is the beginning of an invasion. This is the beginning of our response, and they are prepared to take more action. And then a senior U.S. administrative official, Jonathan, said that potentially what could be next up on the financial economic chopping block would be 2 larger banks, VTB and Sberbank. That would certainly hit a little bit closer to home to the Kremlin. By and large, this does just seem like a phase 1, Jonathan. This isn't the mother of all sanctions, and many are actually a little bit critical of the administration that this was just a little bit potentially too moderate in terms of what's going on right now with the conflict in Ukraine.
A language like the first tranche implies there's more to come. There's certainly more runway to escalate this. AMH, you catch up with the Ukrainian foreign minister a little bit later. What do they want to see?
They want to see more sanctions. The foreign minister, Dmytro Kuleba, said in the middle of the night today, and Jonathan, he's going to be addressing the UN General Assembly before I sit down with him, and he said we should be hitting Russia harder. Hit him now, hit him again, and he was talking about President Vladimir Putin. He stood next to Secretary of State Antony Blinken off the heels of a meeting he had with the president yesterday at the White House in the Oval Office, and said he welcomed these sanctions, but more needs to be done.
Let's talk about the more that needs to be done, and the strategy too. One part of the broader strategy is to go after the people close to the president of Russia. Anne-Marie, I just wonder how you think that's actually going to play out, based on recent history, based on this week, and how we saw that conversation go in that televised Security Council meeting, whether that actually makes a difference.
It's a great question. I think that is sometimes what individuals or those who look at the market implications of what could happen to Russia fail to recognize, that if you don't look at the economics of it, right? Because President Vladimir Putin doesn't seem to be deterred all the time by the economics. Jonathan, I know you know this story very well, and this was years back when President Vladimir Putin went and visited a factory, and all the bosses of a factory, and he says, you all need to fix this. And he had every single one of them sign it. And then he said to billionaire Oleg Deripaska, a billionaire very close to the Kremlin at the time, I don't see your signature. He said, come over here, had him get up. It was quite embarrassing for Oleg Deripaska, signed the paper, and as he walked away, he said, give me back my pen. This is how President Vladimir Putin treats those around him. So if you're going to sanction them, I don't think it's going to make much of a difference, because I don't think President Putin cares.
AMH, thank you. I'm really looking forward to your conversation here in New York with the Ukrainian Foreign Minister a little bit later this afternoon, live on Bloomberg TV and on Bloomberg Radio, 3:30 Eastern Time. The geopolitical tensions have been a key theme for this program over the last few weeks. We caught up with Kathy Jones of Charles Schwab just yesterday, weighing in.
It just confirmed, I think, our view that this Fed is likely to move more slowly than consensus estimates. It just confirmed that I think the market had gotten way ahead of itself in terms of expecting Fed rate hikes, and now we have this heightened political risk that's going to mean potentially tighter financial conditions, and that means a slower process of rate increases from the Fed. And
Erin, you could possibly look at this two ways. It might make the Fed go quicker if we get an energy price spike. It might make them go slower. How do you think it's going to influence the decision next month?
Well, I think with regards to next month, Clinton's right, which is the Fed is very unlikely to move in excess of 25 basis point at the March meeting. I think that they're going to be gradual in their approach to removing accommodation. And remember, they're still balancing quantitative tightening, which will likely start later this year, with rate hikes. And so I think they're going to want to be gradual in their approach. So they don't, have a hiccup in terms of the removal of accommodation. That said, they'll likely hike 5 to 6 times this year, and it will be a meeting-by-meeting decision, and likely they'll move on a meeting-to-meeting basis. But I think with regards to March, we're really looking at 25 basis points.
Clinton, you say don't fear the Fed. Let's go with Bank of America's number. 7 hikes this year, $1 trillion of balance sheet reduction in 22, another $1 trillion in 23. Do you not fear that?
Well, I mean, what I fear is how quickly the market's changed its expectations. I mean, just a few months ago, the market was pricing in 1 Fed hike for 2022, and now we're sitting at 6 to 7, depending on who you're talking to across Wall Street. So that is something to be concerned about. But you've seen the movement in fixed income markets already move, and what we're telling clients is to prepare for what's going to happen. So how are you going to defend your portfolio in this period of rising rates? And what are you going to do? And we're moving clients to inflation hedged portfolios and infrastructure, private credit, et cetera, to try to get some sort of yield and to protect the fixed income part of the portfolio. But yeah, there's something to think about, but I'm not scared about it because I don't think it's going to be punitive to equity markets until we see the Fed funds rate get to 2, 2.5, until like the other guest was saying, the 10-year spike up to a lot higher level.
Tony, we're seeing some headlines from David Solomon of Goldman. Goldman has shown that it can grow its book value, won't replicate the 21 capital markets results in 22, but for 22, there's some appetite here, Tony. As you point out in your note, financials haven't been loved since the financial crisis, but we see a lot to like. What do you like, Tony?
It's really two things. One is earnings growth. Banks are interest rate sensitive. They're the only area of the economy really that directly benefits from rising short-term rates. And, we can debate where we ultimately end, but without a doubt, that's the direction we're moving in. And that's good in general for bank earnings. Credit remains good. The economy continues to hum along. So I see credit as very benign. And then I always come back to the balance sheets of the banks. These balance sheets are ironclad. They are better than they've been really at any point in history. And that's obviously regulatorily driven, but that makes them safer and sounder. And they've really gotten no credit for that increase in safety and soundness.
Tony, when you look at what the market cares about and what ultimately matters to profits, sometimes there's some daylight between the two. You mentioned the front end. The front end drives profitability, but it's seemingly the 10-year which shapes investor appetite for the financials. Tony, is that still the case, and what do you make of that?
Yeah, so you're right. It's the short end that drives earnings. The long end is really a reflection of the market's view of the economy, right? And as the yield curve flattens, there's a sense that the market is telling you that we're getting closer to a recession. But I think it's really hard to read any data from the long-term treasury at this point because the Fed is still in the market buying, right? So we have an artificial long-term treasury at this point. And so I see as tapering begins, the potential for that 10-year to rise some more, and that'll create a steeper yield curve. And so I think you have to watch the economy, and it's less about long-term rates, it's about short-term rates, and it's about long-term economic fundamentals.
Clinton, where did the banks fit into your asset allocation decisions this year?
Yeah, I mean, we've liked banks for a while. A lot of the story was steepening yield curve, credit reserve releases back as banks overbuilt up reserves. So we like financials. However, we like cyclicals and utilities a little bit more. I just want to get back to one other point, though, regarding the Fed. Like, my concern is if we had a normal recession right now, like, what tools does the Fed have? We have to get off of this point of stimulus, and they have to get to a more normalized environment where you can earn some yield checking account, you can earn some yield in CDs. So I'm looking forward to a more normal environment. And if we have a recession in 2024, 2025, wherever, the Fed has some ammunition to get us out of it.
Clinton Warren, the conversation continues with Tony DeSpirito and Aaron Brown. Coming up on the program, the morning calls, and later, Meta falling nearly 50% from a September high. More on Facebook still ahead. From New York, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Minutes away from the opening bell in New York City, correction territory at the close in yesterday's session on the S&P, down 10% from that January 3rd high. At the moment, a bounce back on the S&P, the Nasdaq, the Russell, the S&P up by 0.8%. Yields bouncing back too in the last 24 hours. Look at this, yields up at the front end by 4 basis points, on 10s by 3. The curve just a little flatter here. The distance between 2s and 10s narrower. That's one to watch as we approach the first rate hike of the Fed. We're not there yet. That's the price action here in the morning calls. Let's kick things off with Raymond James, upgrading Intel to market perform without a price target. Seeing limited room for further downside following its recent declines. That stock is up by about 1% to 45.20. Deutsche Bank downgrading Rockspace to a hold, expecting margins to remain under pressure following its quarterly results. That stock is down and down hard. And finally, Piper Sandler upgrading Marathon Oil to overweight, highlighting its strengthening balance sheet and favorable macro backdrop. That stock up by almost 2%. Coming up, a rough February for big tech. Facebook are raising nearly half its value in just 5 months. That conversation just around the corner. From New York City, this is Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost. So it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
25 seconds away from the opening bell this morning. Good morning. This Wednesday morning, a bounce. Can we call this a quieter one? For now we can. Up 30 on the S&P, advancing 0.7% onto the Nasdaq. Up almost 130, up by 0.9%. From New York City, with your opening bell ringing right now, switch up the board and get to the bond market. Your 10-year yield, a little bit higher today, up 3 basis points. The curve just a little bit flatter, 196.51 on 10s. The Fed speak today, led by President Daly. I'll get to the trading diary a little bit later in the program. Crude backs away, 1/3% and 91.63. Euro dollar backs up for the US dollar. The euro side of things is stronger, 113.41. We're up there by a little more than 1/10%. That's the cross-asset price action with some moves around the open. Back with us, here's Taylor.
John, we talked about the stock a little bit earlier, and it's continuing to move now that we're getting the opening bell. So take a look at shares of Stellantis. Look a little bit better than expected outlook. Analysts are saying that even for bulls on the street, that this was a better print here, targeting double-digit adjusted operating income and positive industrial free cash flow. Also in the auto industry, Tenneco, not something that we talk a lot about, but a $7.2 billion enterprise value deal underway. This is a company that designs, manufactures emissions control and ride control products for the auto industry. Activision Blizzard, again, our chief gaming correspondent, Romain Bostic, says that delaying games is never a good sign. Change up the board. Let's go broader out. to some of the big tech companies that we're talking about, because I know that you're going to talk a lot about Facebook, but this is a stock, John, that is down 47% from the peak in September and about 40% this year alone. So it is nowhere near a $300 stock that we had earlier this year. As you can see there, you're at a $200 stock. Apple, again, off 10% from the peak in January. Amazon, similar story. You're off 20% from last July's high. So here you're trying to get a little bit of a bounce, but we have a long ways to go.
Some of the single name destruction has been absolutely terrifying for the likes of Meta and Facebook. Taylor, thank you. Looking forward to the program after the close a little bit later with Taylor Riggs, Caroline Hyde, and Romain Bostic. Bank of America and Savita Subramanian breaking it down like this. Here's the quote. The fate of tech is far more important for the S&P than geopolitics. The S&P's direct exposure to Russian sales is 0.1%, but information technology and communication services are close to record weights of 37%. Back with us, Erin Brown, Tony DeSpirito, Clinton Warren. Tony, we've done some real destruction in big tech for some big names. Meta, we mentioned a few times this morning already, down almost 50% from the highs back in September. How do you approach that scenario, that situation, Tony, at the moment?
Yeah, so it's not just the big tech names, it's also the smaller cap, innovative, disruptive companies actually have been in a bear market since the beginning of last year. If you looked in 2021 at the small cap indices, value versus growth, the small cap value index beat the small cap growth index by 25 percentage points. So there's a real bear market going on there. And so it's certainly time for investors to start picking through the wreckage. Now, there are some companies that deserve to be in that wreckage. I'll call them publicly traded business plans. And that was part of some of the froth we saw with very easy money. But there's some really great companies that are growing fast, they're disrupting industries, and they're going to become highly valued. That's an opportunity for stock pickers to go looking through the wreckage there.
Tony, I understand the reluctance to name them, but can you describe them? Just give us a better idea of how you find them.
Yeah. So one is, like I said, you don't want to be buying business plans. You want to buy companies that actually have real profits and are growing those profits. You want to look for disruptors and companies that are disrupting big profit pools. Those are the kinds of companies you want to go after. And what you want to do is you want to have a long-term view so that in 3 to 5 years from now, they start to look like they're attractively valued. Those are the kinds of companies that you want to go after.
Erin, this is the biggest challenge for the headline index, isn't it? At the headline level, what happens to that massive grouping of mega cap US stocks?
I think that's right. I mean, the tech sector is 37% of the revenues for the market, and so that is going to be a significant driver for the S&P 500 going forward. We've had a really dramatic move in real yields over the last few months. It's been about 70 basis point move higher in real yields, and so that is going to take the froth out of unprofitable companies, and so you've seen that really happen in much of the growth index. But I do think that when you take a step back and you look at profitable tech, large cap tech that has real earnings, real cash flows, we're getting to levels here where they are very attractive to buy if you have a medium-term horizon. And so I do think that as we move past the Fed event in mid-March, and the market becomes a little bit calmer about what the Fed intentions are in terms of the pace of the removal of accommodation, I do think that you will start to see money flow back into large cap tech and particularly profitable tech sectors.
And potentially flow away from energy, which is where the big story's been, up more than 20% year to date on that segment, that industry group. Tony, that doesn't move the dial for the headline index. For the S&P, the weightings of energy, just looking at the Bloomberg right now, the member weightings on an industry basis, 3.5%. But that's where the massive gains have been, Tony. You've made the point, and I think it's an important one, that ironically ESG issues have actually helped that segment, not hurt it. Tony, why?
Well, so it's two issues. It's not just ESG, but one issue has been that oil has been in a recession since 2014, right? We overbuilt, we spent too much money on CapEx, and therefore oil prices dropped and companies stopped spending. And there's a long-term memory there that tells that investors are telling companies, don't invest, give us back the cash. So that's part of the story. That's constricting supply. Then you add on to that sustainability concerns, right? The fact that we know that there is an eventual end to oil consumption. I think there's a debate about the time frame, but we know that there's an eventual end. And again, that tells companies stop spending. The combined result is, we've seen supply contraction like never before. We're at an all-time low for new discoveries this year. And oil is a commodity, and it's all about supply demand. We have demand recovering off off pandemic lows, and then we have a very constrained supply situation. That results in high oil prices, and that's good for energy companies. And that's what's been driving these companies. It's not so much multiples, it's much more about earnings.
Clinton, I want to give you the final word just on energy. The final word.
Yeah, I mean, unfortunately, clients are underallocated to the energy complex. If you look at portfolios, and they haven't been able to benefit from some of the recent gains that you're talking about. Being here in Dallas, we have a lot of clients that are owners and operators throughout the energy sector, and unfortunately, we have not seen a lot of rig count increases. So to Tony's point, supply has not picked up, and I would have thought at these levels that would have been a reason for more companies to step in, but we haven't seen it yet. To Tony's other point, demand will pick up as the markets open up. And I will say it is an interesting segment to be on. We haven't talked about the pandemic, so hopefully that's behind us as we reopen and demand continues to go. But unfortunately, clients aren't as exposed to energy and haven't benefited from these recent returns.
I get abuse every time I bring up the pandemic, Clinton. That's why we avoid it. That's not really why. But it's good news we avoid it now. The equity market up 0.7% on the S&P, the Nasdaq up 0.8%. 7 or 8 minutes into the session, the retailers closing out earnings season. This is what we heard from the Lowe's CEO, Marvin Ellison, said the following: "We remain confident in the long-term strength of the home improvement market and our ability to expand operating margins." The latter point, Kaylee Lyons, the important point.
Yeah, that's the critical point, John, because this is a very different story for Lowe's than it was for their rival Home Depot yesterday, where concern around disappointing margins actually took that stock down for the worst day since 2020. Lowe's, on the other hand, after a beat and raise quarter, beating on the margin front, is higher by the better part of 4%. So it seems to be faring better on productivity and profitability than Home Depot is. And as for the other retailers that reported this morning, Overstock.com is absolutely soaring, up 34% on, you guessed it, better than expected margin as well as profit. But it's a move to the downside for TJX, lower by about 6.5%. It missed expectations, said it won't provide full year earnings guidance given the uncertainty around how long elevated expense pressures may persist. So that's the point of the story, John. It all comes down to those cost pressures and the ability to pass on those costs. That all said, it does seem like this may be the low bar for margins at this point. It may be the low watermark. Margins are expected to expand, according to BI, throughout the remainder of the year from the 6.2 level they have shrunk to at the moment. That outlook, though, has not done much to aid sentiment for the group as a whole, John. The discretionary sector is still the second worst performing in the S&P 500 this year. It's lagging the broader index with a decline of more than 14%. Only communication services has fared just fractionally worse year to date, John.
Let's work through this issue together. And Kelly, thank you, by the way. Erin Brown, when you look at the step up that Kelly Lyons just painted for us, that picture for 2022, how much faith do you have in the step up, the improvement for margins as the year progresses?
I think it really comes down to which companies and which sectors you're talking about. And we heard this through the fourth quarter earnings season, where some companies are really seeing the ability to be able to take margins higher and be able to pass through those costs to the end consumer. Where we're starting to see pressure and real differentiation, though, is in the lower end consumer, which is getting squeezed from the end of the child tax credit and from the end of stimulus payments. And as a result is having a little bit of pushback now with respect to higher costs. And so you're really going to start to see this play out in markets this year, where I think, particularly in the consumer sector, those consumer companies that are exposed to the higher end consumer are going to be able to continue to show strong profitability and margin expansion. Whereas those that are, really exposed more to the lower end consumer, I think are going to start to have trouble in terms of passing through that pricing.
Clinton, would you break it down in the same way?
Yeah, I mean, throughout 2021, a lot of the clients that we have at JP Morgan, they saw an increased amount of cost, labor, inputs, et cetera, and they were able to pass it on to the end consumer. However, you're starting to see that kind of break down in 2022 as prices have skyrocketed and consumers are starting to move with their feet. So I think a lot of people have not priced in the margin compression that we're going to see in 2022, which will lead to muted returns and lower earnings than I think a lot of people have previously expected.
Tony, final word on margins. The final word's yours.
Yeah, so I have two perspectives. One's a macro and one's a micro. On a macro perspective, we have two forces. One is operating leverage, right? Revenue is very strong. That implies good operating leverage. That usually expands margins. On the flip side, costs are rising. And so those are the two competing forces. And we see them at least balancing each other, maybe some actually upside to margins because the operating leverage is so strong. On a company-specific basis, it's all about pricing power. Does the company have pricing power to pass along the rising costs? And so that's very much an individual stock selection issue. I think there's an increasing opportunity in companies that can pass it along, but with a lag. And so we're looking through companies where we've seen margin squeezes to say, okay, is this temporary or is this more permanent? And we're trying to take advantage of the companies where we see it as being temporary. So I think that's the task ahead for stock pickers.
Some issues we can work throughout the whole of 22. Tony, thank you, as always. Tony DeSpirito, Erin Brown, and Clinton Warren, thank you very much to the three of you. About 12 minutes into the session, here this Wednesday, up 0.6% on the S&P, and the Nasdaq up 0.8%. Up next, coming up, the White House taking new measures to tackle supply chain issues.
Almost exactly a year ago, I issued an executive order to prioritize strengthening our domestic supply chain.
That's next. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Almost exactly a year ago, I issued an executive order to prioritize strengthening our domestic supply chain. If I was going to follow through on my commitment to say we were going to make it in America and build it in America, we needed a supply chain that was reliable.
President Biden focusing on supply chains with the administration announcing fresh measures to ease congestion. The Transportation Secretary, Pete Buttigieg, saying this: "We're proud to announce this funding to help ports improve their infrastructure, to get goods moving more efficiently and help keep costs under control for American families." Emily Wilkins with us now from D.C. Emily, the big effort continues.
Yes, I mean, we're seeing this $450 million grant being announced today. Now, granted, that's not actually going to be, money's not going to actually be going to ports until later in the year. But this is a part of President Joe Biden's push to make sure that the U.S. is addressing supply chain bottlenecks to try and bring inflation back down. Remember, President Biden last year visited a number of ports, was trying to encourage them to go 24/7, giving them the resources to do that, really trying to move stuff along. This is just another part of that effort. And it really speaks to the fact that Biden and Democrats understand that these supply chain backlogs, as well as inflation, is a major problem for them now, is a major problem for a number of Americans. And if it doesn't get addressed by the end of the year, could wind up really hurting the chances for Democrats to hold on to the House and the Senate in the midterm.
It's been a big challenge for corporate America as well. Emily, thank you. We've got to leave it there. Emily Wilkins. Carrier Global just had their Investor Day. I'm pleased to say that joining us first here on Bloomberg this morning is the Carrier Global Chairman and CEO, David Gitlin. David, great to catch up with you, sir. Let's just start right here. 2 years as an independent company, this year outside of United Technology. Has that independence given you an advantage to tackle issues like the one we're talking about on programs like this every single day?
100%, Jonathan. Thanks for having me this morning. Yeah, you know, the spin from UTC has been a complete new lease on life for Carrier. We think of ourselves as a 100-year-old startup. Willis Carrier invented modern air conditioning more than a century ago, but we have the energy and the focus of a startup. So we've been very focused on growth, margin expansion, and really cleaning up our balance sheet so we can play offense on M&A, and we've done all of those. Last year, we grew 15%. This year, we're going to grow another high single digits. Last year, we expanded margins 80 bips. This year, another 75 bips is what we expect. And when we spun from UTC less than 2 years ago, we had $10 billion of net debt. Today, we sit here, we have less than $4 billion of net debt. So we're playing offense on M&A. We announced the acquisition of Toshiba's HVAC business. We increased our dividend 25% this year. We announced a $1.6 billion buyback program, and we have more firepower to continue to play offense on M&A.
So, Dave, let's talk about that offense then. Debt load down, offense on M&A, and you mentioned the capital returns plan too. Can you walk me through how you balance the two? When you think about that extra money you've got is to reduce the debt, the balance between capital returns, M&A, and investing in the company.
Well, our debt's now in great shape. You know, our multiple went from 3.5 debt to EBITDA. We're now close to, we're about 2. So in terms of our investment grade and our debt, we're in great situation. We've increased the dividend 25%. We've said that our priorities in order are organic growth, inorganic growth, and we will continuously look at dividends and share buybacks. So it's always a balance. We're really focused. We've increased our pipeline on M&A. There's a lot of opportunities out there, but we will be patient. And we know that the right deal on the right terms at the right time can create a lot of value. But we'll be patient. We'll be focused. And if the right deals don't come along, we'll increase our buyback program.
Dave, as you know, demand is there, but meeting that demand is expensive. As you look across 3 buckets right now, let's pick 3. We can talk about logistics, raw materials, and labor. Are you happy to say you've seen the worst in any of them?
Well, in some respects, well, yes, in the sense that what we've assumed for 2022 is that the very high inflation that we saw in 4Q, it continues through the rest of the year. And we've seen it in all of those buckets. Logistics costs remain very, very high. Just getting cargo from Shanghai to LA has been expensive for a long time, and it remains expensive. And we've assumed that it stays at very elevated levels for the rest of the year. Raw material, we're hedged about 70% on copper, steel, and aluminum. So I think we're balanced in terms of where those are, but they're at elevated levels. We assume they stay at those elevated levels for the rest of the year. Labor is primarily a challenge in the United States. So we've had to take some discrete actions, but we think we're calibrated on that. And the rest of the year, I think for the rest of the world, I think we're fairly calibrated and managed there.
Dave, lift the lid on that just a little bit more. It's on page 5 of your Investor Day presentation. It just breaks down the key data points for the company. Really simple stuff. 58,000 employees, 160 plus countries. You just mentioned there, Dave, the labor issue was focused in the US. That's where it's concentrated. Is this not a global story for you? It's very much a US one.
It is right now. I mean, actually, more than 70% of our employees are actually outside the United States, but where we've seen the biggest attrition and some of the retention issues have been in the United States for a whole host of reasons, but it's been coming down. Some of the attrition levels have been coming down. Attrition, some of the attrition issues related to COVID have now gotten to very low levels. So that's very encouraging news. But, we've been working with our workforce in the United States. We've been adding a lot of jobs in the United States. We've been adding engineering. We've been significantly adding salespeople and digital. So a lot of great high-paid jobs in the United States. But I will tell you that attrition and retention issues do remain a challenge here.
Slide 11 was a slide that jumped out for me. And forgive me for going through slide by slide here, but Dave, just on the cold chain transformation, it's pretty obvious to me that you're not just a victim of the supply chain, you actually benefit from it as well. Are you seeing people put more money, invest more into the supply chain, not just wait for things to unclog, but invest more in it, that you're benefiting from that trend too?
Oh, 100%. You look at what we do is cold chain distribution, and 50% of vaccines, they never get administered, in part due to issues with the cold chain. 1/3 of all the world's food that gets produced never gets consumed, in part because of issues associated with the supply chain. So companies are willing to spend more to improve the efficacy and prevent any of these excursions that happen. They're a big deal, on a human level. They're a big deal on a financial level. They're a big deal on a sustainability level. If you look at all of the energy that goes into producing food that never gets consumed, if food waste were a country, it would be the 3rd largest emitter of greenhouse gases.
Dave, those numbers are nuts.
Companies willing to spend more. Yeah,
they are nuts. And I want to finish on this, though, the calendar. You mentioned that at some point you have to decide between making an acquisition or handing that money back over to investors. For 22, where on the calendar do you make that decision?
We'll be balanced as we go through the year. There's no set point in time, Jonathan. We closed on a divestiture just a month ago, so we have plenty of cash on the balance sheet. We're looking at acquisitions now, and we'll continue to play that out as we go through this year into next year.
Hey, Dave, wonderful to catch up. Let's catch up again soon. Fantastic stuff. Dave Gitlin there, the chairman and CEO of Carrier. Almost called him the Charrier. Anyway, coming up, the market-moving events you need to be watching. That'll be next in our Trading Diaries. From New York, this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Just reminded, the most bearish price target on the S&P for year-end, Morgan Stanley, 4,400 on the S&P right now, 4,320. just south of that. Right now up 1/3 of 1%. The bounce fades a bit on the Nasdaq, up 1/3 of 1% as well. That's the sector price action. Let's talk about an equity market that looks like this, and a bond market that takes shapes as follows. Yields on 10s right now. Going to show them? There we are, 198.95. On 2s, 159.76. Here's your trading diary. The US Treasury auctioning $53 billion of 5-year notes at 1 p.m. San Francisco Fed President Mary Daly speaks at 3:30. GDP on Thursday, more Fed speak. Barkin, Bostic, Mester, Daly, and Waller. And finally closing out the week with some spending data. From New York, this was the countdown to the open. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sci-Fi sourced every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010, after staying for almost 1 year in the hospital. He died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
the price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack at the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking, the bus was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work and his name was Sergei Venergold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venergold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Venergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Venergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
the threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the danger, the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters, and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?